All right, yo, what's up for everyone on the YouTube replay? I hope you're having a great day. Let me start this off with a quick portfolio update, then I'll get into some stocks that I think are very attractive to potentially buy now. Our portfolios are not doing too well. Our main Robinhood, if you look in the top left, it's called our dividend only account because every stock in here pays a dividend. Our dividend only portfolio is down 0.6% on the day. Year to date, we're still slightly green though, so that's the good news. We're up 1.2% year to date. Let me compare that to the S&P 500 or the QQQ. The QQQ is up 0.26% year to date. So we're doing a slight bit better year to date than the market, but yeah, here's our total percent change on every stock in here. So luckily we are green on every holding in here. It's kind of boring. I only just got like 7 stocks in here, but we also have a Roth IRA. A Roth IRA is just a tax-free retirement account. Also, it's down year to date. These are all the stocks that we own in here. They're like some nichier names, probably some stocks you've never heard of before. But Webull slightly green on the day. And speaking of bull stock, I have a brokerage with Webull as well. Here's our Webull portfolio. We're up 18.5% all time in here. It's kind of just like my risk on portfolio. I kind of just do whatever I want in here. And AMD was doing really good, but it's only up 1.5% now. Let's see, is anything down on the day? Okay, so Disney's down a little. Dave, this is a stock that I actually think is a very attractive one to buy into at current prices. Ticker symbol Dave. They're starting to look very attractive. But yeah, that's what's down and that's what's up on the day. And finally, our last portfolio, we have our Moomoo account, known as our buy and never sell portfolio. Because once we buy a stock in here, we just never sell it. We diamond hand it for the long run. And we have done pretty good year to date. We're actually already up 13% year to date. And when we compare that to the S&P is only up 0.95% year to date. That's because we're not trimming our stocks. Like a lot of people, probably if you bought the stock down here, you double your money, you trim a little off the table, you sell a little bit. But I think this portfolio is doing so well because we haven't sold these stocks before today. Powell Industries is nearly at an all-time high. Same with Comfort Systems. Amazon's doing pretty good. We've been buying more Amazon stock. That's a great one. I think you should dollar cost average into. Looks like there's a little technical analysis for them. But yeah, I've just been accumulating more shares of Amazon because they really are a phenomenal never sell stock, and they're at a fair valuation right now. And I don't mind paying a fair valuation for a quality stock like Amazon. So one stock I actually kind of want to go over is Ferrari right here. I've been, again, in this environment right now, you don't full size position a stock. You just slowly nibble on it. You slowly dollar cost averages because, the market is pretty frothy right now. It's tough paying some of these valuations. But if we look at Ferrari, they're still a little expensive. That's why I wouldn't go crazy into this stock, but they certainly are quality. Ferrari on the right trades at a 30 forward PE, and they make good net income. Out of all the car companies out there, Tesla's lucky to have like a 6% net margin, and almost like Ford's lucky to have a 5% net margin. All these car companies are super low margin, but not Ferrari. They get freaking over 20 to 23% net margins on these cars. They make and this is in USD. They're a European company, but we've converted it to USD instead of euros. They're easily making 400 to 500 mil in net income a quarter, and you get a dividend. You buy the stock right now, you get 1% of your money back a year just from dividends. So yeah, I've been buying a little bit more Ferrari. Again, it's not a huge position for me because I don't want it as a big position at its current prices. I want it as a small size position. I have 3.6 shares, only $1,200 compared to all my other sizes of my positions. It's my smallest holding in here, but I want it as a small size position. So do I own Constellation Energy? Yeah, that's actually the next stock I want to go over that I think is at a very, very fair risk to reward right here. And this is a utility play, and they've just been hit with a couple bits of bad news. Yeah, check this out. They are down 20% the past month, and I do own this one. We're up still 40%. We've owned this one for quite a while. Yeah, we get dividends from this company too. This is my favorite utility stock of all time. They're an unregulated utility, and the government just intervened with their business and said, hey, we gotta limit the how much these grid providers, these basically unregulated utilities, can raise prices. So it's kind of weird. These like unregulated utilities, there's a little bit of regulation around them now. So that's basically the thing here. They're urging them to do like 15-year contracts, or that just makes a short-term buying opportunity. Sure, the stock probably does deserve to fall a little bit, but here's why Constellation Energy is now a great risk to reward, and I'm about to probably buy another share. If you look on the right, the forward PE is a 26. That's a great valuation. A 26 forward PE for Constellation Energy. They actually, this is the number one purest nuclear energy play of all time. There is no close second. If you want exposure to nuclear energy in the nuclear sector, this is the purest play, no close second even. They own literally 33% of all the US's nuclear reactors. They have these literally nuclear, power plants that just make profits every single month. They're fully amortized, fully paid off nuclear assets that just print them just free money every month, pretty much, in every quarter. And they just acquired Calpine. So if we look at the expectations, their revenue $6.5 billion. It's going to go to $10 billion in 2 quarters via this acquisition of Calpine. And we can see the EPS expectations as well. They're supposed to make $1.80 to $3 a quarter of EPS. So that's where they get this 26 forward PE. Like, this company really is a fair valuation. They usually make 800-900 million net income a quarter. They do buybacks, they do dividends, they do M&A. Yeah, they do share buybacks. And look at the dividend. The dividend only cost $120 million a quarter. So if you're looking for a utility stock with the dividend, 0.5% dividend, only an 11% payout ratio. That payout ratio is even lower because, the forward PE is way lower than the current PE. So they really have like an 8% payout ratio for their 0.6% dividend. Yeah, anyway, CEG I really like, and I'm legit about to buy more of this stock. It's already a pretty big size position, but I'm probably going to add more because they're finally on a good dip. Hey, Plasma, Remco, good to see everyone. I hope everyone's having a great Friday. Yeah, let's look at some of y'all stocks. Can you check out KLAC? It's at a premium, but just view the fundamentals of the business. Well, hey, if the fundamentals are good, it justifies a quality multiple. Ooh, NextEra Energy. I like that one too. What up, Austin? And Intel. Yeah, didn't they fall a big bunch today? Maybe we'll check out Intel too. So here's KLA Corp. Look at that stock. Crazy performance. Let's go see if we can figure out what justifies that. So yeah, the current PE is a 47, but the forward PE drops to a 40. So there is still a lot of basically net income growth expected here. Oh, so this is I can now see why this stock has done so good, because of the industry that they're in. Semiconductor process control, that just got to be in such demand right now. Let's see the margins here. So yeah, look at that. The revenue's up 12%, but the net income is up by 18%. That tells you they're expanding margins. They have a nearly 40% net margin, 35 to 40% net margin, and the margin just grows every quarter. So they're able to raise prices. I can totally see why this stock's at an all-time high. But yeah, it is a little expensive at a 40 PE, forward PE. But and you get a 0.5% yield. So if you own this one before today, congratulations. It's been a phenomenal dividend growth stock. That's insane. Wow. I wonder if there's any news around this stock currently. Multiple brokerages upgrade KLA Corp and raise price targets on AI chip equipment demand. Pretty cool. So $1,500 stock price. Yeah, anyway, KLA, that's a quality one. Good stuff there. What's up, Eric? NUTX Health. What's that one right there? And hey, what up? Shout out to the members, Looney and Brian Paul. Good to see y'all. He says NUTX. Let's check this one out. Oh, this one's on my watch list, actually. This is NUTX Health. You're a smart guy. You study finance in college. Yeah, I'm actually majoring in finance in college right now. Definitely not an expert though. Don't listen to me. I sell nothing. I have no course book. I'm just on to give my opinion, just for fun. I'm streaming on YouTube and TikTok, reading both chats. So anyway, yeah, Nutex Health, it's a $1.1 billion company and the valuation is super fair. That's a small market cap, only $1 billion. So you do probably want to keep this one as a smaller size position, but this company owns a bunch of hospitals and it's usually like well, wow, their margins are really good, 56% gross margins. And well, let's go look at yeah, they really, so look at this net income. They made $96 million this quarter. They really did. The before tax number was $130 million. So they paid like $31 million of taxes. Whoa, they've really deleveraged their balance sheet. So look at that. The liabilities used to be 82% of the assets. Now it's only 55. So the assets are growing, but the liabilities are staying flat. So that's impressive, probably because they're just retaining all this net income that they're making. So yeah, I remember going over their their website and stuff. I'm really bullish on the hospital industry. It's just like a safe AI proof or actually AI beneficiary sector. So yeah, look at this. 27 hospitals, 10 upcoming facilities. So there's a future runway of growth there. So yeah, I actually own ticker symbol HCA Healthcare. This is the number one hospital play of all time. It's a for-profit hospital group. So some people don't like the ethics of that, but they have out of like literally any stock I've ever analyzed, this has the most impressive fundamentals I've like ever seen. 15 forward PE, buys back 8 to 12% of the company a year in terms of share buybacks, has a dividend, raises it. It's just crazy. So yeah, I like that one. Okay. Um Heard on Discord that CEG might dilute shares. Well, yeah, CEG, the only reason CEG is diluting shares is to raise money for this Calpine acquisition because they're taking on 10 billion of Calpine debt. And they're basically restructuring the debt where they can get it at a lower interest rate where they issue new debt or maybe they're issuing shares, I don't know, but yeah, they're definitely issuing shares to do this merger with Calpine. So it is, but it's overall accretive to the EPS. So even though there's shares being issued, the net income you get per share is still going up. So it's still a win-win. Okay, hey Todd, no way. What's up, man? Good to see you. Oh, should we do Netflix? You know what? Let's do Netflix because that one's kind of just been popular recently. I love Netflix as an advertising play. I think the risk to reward looks very good on Netflix. Don't make it a full-size position. If you wanted Netflix is 5% of your portfolio, don't make it 5% today, but go ahead and make it like 1% of your portfolio because it's that quality. Like people say don't catch a falling knife, and I totally agree. But Netflix is one of the most quality knives that definitely will recover in the long run. Not financial advice. I think it's just a good business model and it's simple to understand. It's just a subscription model company. You pay them money every month and you get their content. And they have right now 301 million premium subscribers. And if we go to their bottom line, their real after-tax net income, Netflix makes 2 to 3 billion of real after-tax net income, and it just grows. It's only been up and to the right for years. So that's what makes Netflix quality. They also print free cash flow. They're doing a couple bill of free cash flow and net income a quarter, and they don't pay a dividend, and they just pause their share buyback program to raise money for this Warner Bros. Discovery acquisition. That's kind of like some big news right now. That Netflix is they're bidding 83 billion for they're bidding 83 billion for Warner Bros. And Paramount Skydance is bidding like 100 billion. And the more the price goes up, the even more decretive it'll be to Netflix EPS. So that's kind of one reason why the sentiment's not too well in their favor. But that creates a buying opportunity. Yeah, look at this forward multiple. This is the crazy part. And they beat on every metric. They just reported earnings. They beat on revenue. They beat on EPS. And they beat on EBIT. Triple beat quarter. Forward PE is a 26.9 or call it a 27 forward PE. I think that's fair to make Netflix as a small, little size position because it's just a quality company. And it's boring. I like those kind of companies. Yeah, what up, Young Mar? Yeah, Netflix is pretty cool. Okay, let's see here. I picked up some Hood the other day. Nice one, Todd. This is another just quality stock. Unfortunately, they're a little overvalued, but I've owned Robinhood for like 4 years, actually almost 5 years now. Wow, they've been one of my best performers. I regret every share I've ever sold a Robinhood. Let's see, my first buy was in 2021. I bought 25 shares at $18. So I've been holding this stock since 2021. But Robinhood, they used to follow whatever Bitcoin does because Robinhood usually like 80% of their old previous net income all just came from their crypto transaction fees. But they've since decoupled from Bitcoin, gone up crazier more than Bitcoin because of their prediction market contracts. So whenever you go buy and sell a stock on a brokerage, here's my Robinhood account, they make 0.1%. But whenever you go do this, and this is brand new, they added this, and the day the Robinhood CEO tweeted they've done over 7 billion prediction market contracts, the stock rocketed. But whenever you do a prediction market contract, they have a 2% fee. So they actually make literally a prediction market is 20x more valuable than doing a stock trade. So they're really pushing this prediction market stuff. And they have the Robinhood Gold where you pay them $5 a month and the crypto still makes the money. So Robinhood, if we go to like, this is what justifies their crazy high multiple. The revenue's growing nuts. It's up double. It's up exactly 100%. The revenue was 1.27 billion. Out of this 1.27 billion of revenue, they netted 556 million. And that's after they paid 80 million of taxes. So that means their net margin is a 44%. That's incredible margins. These brokerages just basically collect royalties. I mean, 44% net margin on Robinhood. Expectations are up and to the right. EPS is supposed to hit a new record, new net income record. So Robinhood's a great one. We can see this is the most important metric here. Kind of their net cumulative funded accounts are at 26.8. And the same time last year, it was at 24.3. So a nice little growth there. Definitely expensive at a 42 PE, but they deserve it for sure. They're like the picks and shovels play of fintech. I love them. CEG not quite there for me yet. Yeah, I'm watching it closely too. That's if it falls another like 5%. I mean, I'm about to like go crazy in Constellation Energy. I mean, I already have it as such a big position where, yeah, CEG's where you nibble at it. You don't go crazy yet on CEG, but you didn't do nibble at it. You know, I think Meta's been doing great this past week. Well, in the past month, it's flat. All right. Let's look at RHI Job Marketplace. That's Robert Half. I've heard of them. Yeah, you know, I was golfing one time and they had like this booth. They gave me like a free water bottle and stuff. And I still have it right next to me. I could show you. But Robert Half, this one, I can totally see why this stock has plummeted. Like if you look at this stock, you know, it's dang. Let's zoom out here. The stock is lower than it was in 2009. So you bought the stock in 2009, you're down on your money. Here's what explains that. If we just go to their total revenue right here, all this blended, here's what they do. Contract talent solutions, you know, basically these private contractors for a company. You can get little temporary staffing through them. But yeah, if we go to this business right here, this is not what you want to see for a growth stock. The main source of revenue is down 10% year over year after it fell 12%, after it fell 17%. So this is starting to explain why the stock has done so bad. Could this be a bottle? Let's see their other half of the business. That one's also down year over year. So we blend all their businesses together. The total revenue is down 7.5 after it fell 6.3, after it fell 15, after it fell 3. So they're in a tough situation. And it's not just the revenue that's fallen, you know, but also the net income. So look at that. The revenue is down by 7, but the net income is down by 34. So that means they're also losing their pricing power. Their net margins collapsed. So Robert Half's in a kind of a scary situation. I think they pay a dividend. Ooh, an 8% dividend yield. Let's go see if that's safe. You know what? We can do our own math here. So they made 42 mil of net income this quarter. Let's see how much the dividend cost exactly. And the dividend cost 58 million. So if they don't make at least 58 million in net income a quarter, they can't afford the dividend. And they have not made 58 million in net income any quarter for the past year, for the past 4 quarters. So, most realistically, I would kind of try to avoid this one. It could be some short-term swing trade momentum thing, but I would not just buy and hold that one for the long run, really expecting to outperform the S&P. What app is this? Yeah, hey, this is a brokerage, or if you want to get this app right here, we buy stocks on. It's in the link tree in my bio, very first link there. Broker called Moomoo. It's an affiliate link too, so if you go and like deposit $100, you'll both get like some free stocks. Pretty cool. So check out this stock right here, Lumentum. Let's do it. Mr. Robert, good afternoon. Hey, Mo, good to see you, man. Hope everyone's having a great Friday. We stream every Friday if you want to hit the follow button. I know the market's kind of a little choppy recently, but SoFi, UiPath, we got to get to all these. And Broadcom, remind me to get to Broadcom for sure. So I've never heard of this one, I don't think. Lumentum right here, they've done great though. Oh, they're a huge market cap, $24 billion market cap. So let's see what they do. That's curious. So they sell components. That's up 63% year over year. We don't get too much data here, but let's just go to the revenue. Yeah, this is starting to explain it. You know, the fundamentals, the financials explain why the stock has gone up so much. It always does in the long run. The revenue's up 58% year over year. And and they're just now net income positive. So if we zoom out to this time last year, they were losing like 50 to 100, 200 mil a quarter. But now they're actually making money. For the past 2 quarters, they're net income positive, which was a drastic change from the previous year. So it's just a huge change in sentiment and fundamentals. It happened so quickly, like out of nowhere. They got 58% year-over-year revenue growth, and they got to profitability just out of nowhere. And because, you know, that's probably why the stock kind of did bad before a year ago. You know, it was a tough buy, but with these kind of numbers, I can see why this one's gone up so much. Let's see, do they have a forward PE? Well, they definitely have a forward PE, but how high is it? Okay, so it's an 84 forward PE, but they just got net income positive. So you really want to do like a 2 or 3 year out forward PE on this one. Let me just pull up their website for like 10 seconds here just to get an idea of what they do. I don't know, some sort of optical circuits, laser source modules. So, these sounds like components for data centers. And yeah, look at that. That's what you want to see. They actually have some, IP. They actually have 2,100 patents. So maybe they collect royalties on that. Who knows? What's their net margin? Let me check that out real quick. 2,100 patents. Okay. Oh, yeah, they just got profitable. Never mind. Anyway, that's light for you. 2,100 patents, sell some components for big module devices or something data center related. So let's do Broadcom real quick. Sorry if I'm missing some stocks here. If you got a stock, just kind of re-say it and I'll get to it. Don't worry. We've only been live for 20 minutes. We're going to be live for at least another hour plus. So we're going to be live for a while. Don't worry. So let's check out. Oh, and Credo. We'll do that one. Okay. Broadcom right here. This is a TPU play, or actually not just TPU play, but the VMware business is massive. Let's see if there's any news around this one. Broadcom receives analyst support upgrades. Okay, yeah, that's not really any news. But let's go check out their numbers right here. So a lot of people know them for their semiconductor solutions, which that has done great. This is the annual revenue. As you can see, every year it just goes up. And for the full year 2025, it grew 22% from 2024. But the real growth driver for them has actually been their infrastructure software, aka VMware. In 22, kind of, if we zoom out to kind of before here, it was always, 7 billion of revenue a quarter. You can kind of see in the middle there. But then in 2024, it jumped up to 21 billion of annual revenue and now 27 billion for 2025. This was the massive growth driver for Broadcom, and it's just been up and to the right ever since. And it prints them free cash flow. We can see that's what FCF stands for. They do over 7 billion of free cash flow a quarter now. And not just free cash flow, but net income too. They're making $5+ billion of net income a quarter now. They had a slight one-time adjustment this quarter, but it was a record super profitable Q4. Incredible. Deleveraged their balance sheet. Liabilities were 59. Now it's only 52. And it's kind of like NVIDIA with the higher yield. You get a 0.75% dividend yield with Broadcom. 39 forward PE. So they might still be a slight bit expensive. Like I wouldn't go crazy on this dip yet. I maybe do a little nibble here. I wouldn't go crazy yet because they could probably maybe go down to, in a bad environment, maybe down to like a 30, in a terrible environment, maybe a 32, 31 forward PE, but I don't think it'll go that low. Maybe it'll stretch down to like a 34, 35 forward PE. Who knows? Anyway, Broadcom, that's a quality name there. That just prints money, pays dividends. Just a good one. TPU play. I think they're even partnering with Google. A good quantum. Is QTUM a good quantum ETF? Well, let's check it out. I'm not a huge fan of the small cap quantum stocks. If you want real quantum exposure, you don't go with like the pure plays. You go with the companies that have the money and the talent. Honeywell, Google, Microsoft are big quantum plays, but that's kind of that doesn't sound too sexy for a lot of people. But check this out right here. Yeah, in this ETF right here. Here are their top holdings. It's like Micron's in here, the memory shortage stock that's bumping right now. Lam Research, Intel. So these are some weird top 10 holdings, but the ETF has done great. It's at an all-time high pretty much today. So congrats if you own this one. Honestly, I like this one because I don't see a lot of the really bad, really junky quantum names. So actually, I do like that one. I'm for quantum, you probably want to pick and choose your own plays there. Intel. Oh yeah, let's get to Intel because I saw I didn't even see the news. I just saw they were down 12%. I didn't look into them. Whoa, a 17% dip. Well, let's look at that candle. Yikes. Well, I guess they hit an crazy good all-time high the day before or multi-year high. Let's see what this news is. Oh, they reported earnings. Wait, Intel report 2025 financial results. Okay, let's see. Can we see them right here? Wait, I don't think this was the quarter. They gave guidance. Data center and AI revenue grew 5%. Secured $5.7 billion in CHIPS Act funding. Okay. It's cut 15% of its workforce. Well, it must have just had a bad reaction to its earnings. This company's always had, before the government intervention, this company has been terrible. Here, if we zoom out to 2022, this is why the stock used to be great. They were making back here $6-8 billion net income a quarter. Then they lost their deal with Apple, and in every old iPhone they used to have an Intel chip. Now they switched to Broadcom, and I think they make their own chips now. So the net income has just been so choppy. Like they were losing a lot of money back in 2024, 2025. But the government just took a 10% stake into this company. We basically can't allow Intel to go bankrupt at this point. Nvidia's moving a little bit of their manufacturing to Intel. I think Nvidia owns 5% of them, I think now. They took a stake in Intel as well as their way to kind of invest in the US, because right now Nvidia chips are all made in Taiwan, with Taiwan Semiconductors, a little bit in Phoenix, but they're moving some of that to Intel for the government. But dang, yeah, 17% dip, that's not good. And that was kind of hard to value. Like, you really got to go really far out to give like a forward PE on Intel, because they're not going to be profitable, I don't think, for a good while. GE Aerospace, this is one of my favorite aerospace stocks ever. They just gave some guidance of like lowered margins. So aerospace reports strong Q4 earnings, addresses engine pricing amid airline concerns. GE Aerospace CEO defends engine pricing amid airline industry criticism. Well, wait, they're showing no signs of a slowdown. Okay, well, let's go look at what their actual numbers were. So they beat on revenue, beat on EPS, and beat on EBIT. This is why GE Aerospace, kind of ignoring the past 2 days here, the reason the stock has had such a monster performance these like past 2 years specifically is because how much they're beating on net income. This quarter they expected $1.57, they did $2.30. Last quarter they expected $1.60, they did $2. So they've just been expanding margins. So look at this. The revenue's up 17%, but the net income is up by 35%. So that means they're growing margins. Their net margin is up 15% to a 20%. It's actually, if you zoom out, I'm looking, they've never had a 20% net margin before. This was a crazy record net margin. They cannot be replaced. Like, it's kind of like a railroad. You can't have any new railroads. And this company is the main company that services these commercial engines. And then, if you ever seen those videos where like the slightest dink in like the airplane jet engine, they have to like redo the whole process and stuff. Like, that's only to this company's benefit. They have a great dividend to a 0.5% yield, super low payout ratio, lots of future room to raise the dividend, a 35 forward PE. Yeah, so they might be a slight still expensive even after the dip. But it's certainly one you want to put on your watch list. They're just so quality. Great aerospace and defense name. If you know this geopolitical stuff, these war fears start to escalate again, these kind of aerospace and defense stocks are a good hedge. Is this Moomoo? Yeah, hey, this is my favorite brokerage right here called Moomoo. If you want to get this brokerage, I have an affiliate link. It's actually in the link tree in my bio, very first link there. My favorite app to buy stocks on. Wait, Mo says SCRV. This is Serve Robotics. They actually have a big partnership, I believe, with DoorDash, where they have these autonomous delivery things. And hey, Alliance, I'm probably saying your name so wrong. And Miss Charm, thank you very much for those gifts there, those roses. If you have a stock you may look at, let me know there. So can you share companies in the S&P 500? Yeah, what's up, Wassinator? I actually have a watch list. So Serve Robotics actually acquires Diligent Robotics for $29 million. It's actually a healthcare robotics name or something like that. Anyway, you still got to be super careful with this one because the revenue right now is pretty much nothing. Like, the revenue is $680,000, but the stock has been doing pretty decent. They're able to dilute you. Well, they diluted you by 3%. That's nothing. Okay, every shareholder got diluted by 3%, but they got this new asset. Potentially some IP and patents come with this. Who knows? I haven't looked into it, but they just bought this Diligent Robotics for $29 million. So that could be something to look into. I know they have I believe it's like 50 of these like autonomous cars for DoorDash that deliver you the food. But you have to like walk outside and pick it up from the car, but there's no driver in the car. I haven't looked into them too much, but look at this fortress balance sheet. So yeah, it's always to the shareholders' expense. Whoa. Okay, that's something to really be careful of. Okay, they've diluted you way more than I thought. That's like 50% dilution. Let me go look at the total common shares outstanding. So whenever they dilute you by issuing shares, it makes the EPS go down forever. So let me just go to the total common shares outstanding. Where is this? So yeah, you've been diluted by 60% after you got diluted by 16%. So yeah, you can kind of see the total common shares outstanding were 37 million. Now there's 67 million shares. But that's this number right here. Every quarter, this quarter, they diluted you by 65 mil, and the whole company's worth 900 mil. So that's 6.5% of the company. But every time they do that, it fortifies their balance sheet. So check this out. There's no chance of bankruptcy here. They have 210. Whoa. So think about, this is another good way to think about this though. They have a $210 million of cash and no debt, and the whole company is worth 900 million or 970 million. So 20% of what you're paying, the whole market cap, is just their cash on hand. So they're definitely one of the better robotics names, but you just really got to watch out for this dilution. They fortified their balance sheet so they can afford to lose 20, 30 million for a couple more years. But the revenue is expected to go up to 3 million, but these numbers are still just so small for me where you'd still want to just keep this one as a small size position. So hopefully that was kind of helpful there. Ooh, is there any space plays that are buyable? Not yet. That's the sad truth. Not yet. Like Rocket Lab is my favorite if I had to pick one, and it's just nowhere near buyable. It's just it's done so well. Someone said, Sand said thoughts on LAC Lithium America. Yeah, I believe the government took a 10% stake in this company as well. That's why the stock went from 3 to $10. Basically, it's a U.S. Lithium mine play. We're trying to no longer source our, rare earth minerals from China and, Russia. We're trying to just be more rare earth mineral independent in case those war escalations kind of escalate higher and we can't get rare earth minerals from them. So the government is actively investing into our own economy. They're buying shares of Lithium America. And what was that, like MP Materials too? So, but you still got to be careful buying these stocks because the revenue isn't going to come for a while. Like it's still a startup kind of. There's no revenue here. You click on revenue, it says no data. Why? Because they've never sold anything. Never sold a product or a service before, and they're not expected to sell anything anytime soon. But it's kind of the government backing. That's kind of why the stock, before that news, the stock has kind of done bad. I can see why, because they're still not making any revenue. But there should be some hopefully clear path to finally having some revenue there. Wait, what was that news tab right there? Oh, wait, I don't know. Is there any news around this company? Weekly news? Nah. Dang, I was hoping we'd find some sort of news around this company. But anywho, that's your USA. If like MP Materials goes up, that'll probably go up too. Yeah, their two charts look very similar. They're both kind of on this little rebound these past 2 weeks here. So, hey, Lulu, appreciate you, man. Hope you're having a great day. Oh, I'm missing out on some stocks here. I do apologize. Credo, yeah, Credo right here. This stock, if you're looking for a great growth stock to buy on a dip, add this one to your watch list. And I'm seeing some news up here. If you kind of read the headline, just the top here, Credo signs active cable patent deal with 3M. This company said it will grant 3M a license to a certain of its patents. So check that out. 3M is basically now going to be paying royalties to Credo, or basically licensing revenue for using their patents. So this stock, if we just judge them off their financials, it's so good. I mean, just to keep it simple here, I mean, just look at the revenue. The revenue for the past 4 quarters have been triple digit, over 100% growth for the past 4 quarters. But look at the revenue this quarter was 268 mil. On that 268 mil of revenue, they really did net and kept 82 million of real after-tax net income. And just check out the bottom line the past 4 quarters. These year-over-year improvements have been insane because this used to be a tough buy a year ago. You're looking at a stock that's losing net income every quarter. But now, what's the profits going to be the next quarter and the same time next year? It's just going to be great. And we can see the expectations. The revenue is supposed to go from 170 mil to 359. Like the revenue still supposed to go up another 100 million in just 2 quarters. So the revenue is going to go up and to the right. These are the analyst forecasts. And look, they've been beating on the analyst forecast. They beat on revenue. They beat on EPS, which is net income, and on EBIT. So it's not some one-time adjustment. They really are triple beating on every metric every quarter. And that, in my opinion, is what justifies this crazy stock price appreciation. Now, the bad news is they're still expensive. If we go to their forward PE, and again, they kind of just got profitable, but even with knowing that, well, really, this isn't crazy. 53, or they're trading at 54 times next year's net income. It's not 30 times revenue, but that's supposed to literally go up. It's supposed to basically fall in half in a year's time. It's supposed to go from 30 to like 15 because the revenue is supposed to just go up so much more. So anywho, this is one you could probably put on your watch. Just do beware. One reason they are so profitable is they're headquartered in the Cayman Islands and don't pay taxes. So the like tax rate is 0% because they just don't pay taxes. Yeah, tax rate is 1.9% because they're not headquartered in the U.S. But just judging them off their financials, it's so good. Hey, what up, Jim? He says, made 23% Q3, Q4, but become more of a hibernating bear. I feel you there. P&G is ripping higher, highly recommended. I think that's like an underwater robotics company. So yeah, they call themselves Kraken Robotics. I don't know if it's really like robotics as we think about it. It's kind of just like a control. Let me just kind of go to their website right here. They make these underwater vessels that kind of like explore the ocean floor and collect data. Sea power batteries, or wow, check that out. LiDAR solutions, sub bottom imaging. So yeah, that's kind of what their main source of revenue is. But it's actually pretty nichey. There's not. I don't know if many other competitors, but yeah, it's a Canadian company, so they are headquartered in Canada. So we've converted the currency from CAD to USD just to get a little easier idea of what they do. But what I really like about Kraken Robotics is that they're already profitable. The revenue's up 55% to 22 mil, and if we go to the net income, it actually has gone down a little bit from the previous year, but they are still technically making money every single quarter. So let's see, is there any news around? Nope, no news around P&G. They fortified their balance sheet. Look at that. What's their cash on hand now? So they have, $90 million of cash. They must have diluted you by like 60 mil, or let me check. Yeah, so they issued 80 million of stock to do that. But basically they don't lose net income. So that 80 million of cash can be used for an acquisition, or who knows. So there's no bankruptcy risk here. It looks like the growth is back. The revenue grew 55%. That's certainly better than its previous. Well, that did miss on expectations though. But look at next quarter. It's supposed to be 35 mil of revenue. Whoa. It's never even been close to that before. Yeah, this was a record. 22 mil was a record this quarter, and it's supposed to go to 35 mil. So it looks like there's just a lot of growth there. Someone says Redwire. Hey, I don't know what that is. Yeah, if you got a stock you may look at, please give me the ticker symbol, and then I'll know what you're talking about there. But yeah. That's exactly what I think when I hear underwater robotics. Let's see. Oliver said stock SLDP, please. Let's do it. SLDP. What's this one? Oh, Solid Power. This one's on my watch list. Ooh, Duolingo. Hey, good to see you, Deborah. Or Deborah. We're gonna look at Duolingo and Progressive. These are great stocks. Yeah, these are really good. So Solid Power right here. It's a $1 billion company. So they're worth exactly $1 billion. So still kind of small. They're on my watch list though. Yeah, these forecasts are bad actually. Dang. Revenue is supposed to fall 50% year over year. They're only supposed to do 2.5 million of revenue a quarter next quarter. Oh, and they lose a lot of money. I don't know why I put this one on my watch list. Maybe it's for this Fortress balance sheet, because that's a great balance sheet. Whoa, hold on here. So they have 250 million of cash, no debt at all, 250 million of cash, and the whole company's worth $1 billion. So 25% of the whole market cap of what you're paying is just their net cash on hand. US is 56% of revenue, Korea is 43, but these expectations aren't good. Like they're basically have no revenue. I mean, next quarter is supposed to fall to 2 million of revenue, but this balance sheet does save the day a little bit. Yeah, they're not doing any acquisitions. Maybe they could do an acquisition. Who knows? But yeah, that's tough. And I don't like these net income losses. They're losing, 100 million of net income a year. When you're worth $1 billion, that's 10% of your market cap. So I don't know about this one. The financials you got to be careful of. RWD. Or RDW, or RD, Redwire. Okay, I said I get to Redwire. Yo, I'm so sorry. HYMC, I want to get to all these. I do apologize if I'm missing some stocks here. I just got so many to look at. We got to get to Duolingo after this too. So here's Redwire. This one, the volume has exploded kind of on the bottom right down here. So the volumes here, I think this is a drone play if I remember. Space and Defense Technology Solutions. So they did miss on revenue. Analysts expected 133. They only did 103. So they did miss on revenue. Let me go to their website. For the fun of it, let's go check out their website, see what they do. There's a kind of a cool picture here, I guess. Redwire Global Defense Distributor specializing in multi-domain solutions. So defense technology, space tech. So I guess these kind of products right here. Let's see right here. What are their numbers looking like? So The revenue is so they just did 103 mil of revenue. Is that a record? That was a record amount of revenue. It's never even been close to 103 mil. So they must have just done an acquisition though. So look at that. Their balance sheet just dramatically changed. Yeah, if you go to the cash from investing activities, they basically just acquired a stock for $200 million. Again, if this number right here was positive, that means they're actually actively selling out of their assets. Someone said, Nicholas said they have a contract for the Golden Dome. Interesting there. That might be why the momentum has been so well. Oh yeah. Oh, let's look at this thing up here. Redwire shares are trading higher after president announces progress on the Golden Dome initiative. Interesting there. So yeah, some sort of niche or smaller, more pure play like defense stock. Okay, does Moomoo P offer EBITDA? Sing for no, they just do I'm not sure. Yeah, Plasma, they just use the S&P Global EPS projections. And you can see them kind of on the orange line. Let me do Duolingo right here. This is a software name that's being hurt bad. A lot of people probably know Duolingo. You know, you go on there to like learn a new language. But this is really being hurt by the AI thesis. They're saying maybe in 10 years from now, what's the point of learning a new language if the AI live translation technology will be so good? You know, your Meta Ray-Bans can just live translate it for you. You don't even need to learn a new language. That just won't be a necessary skill. But that's what's hurting them right now, but it's not hurting their numbers. Their actual fundamentals are incredible, like some of the best I've ever seen. It's a subscription model company. You basically pay them a little bit of money every month to learn a language, and check out the growth of the subscription revenue. It's unbelievably good. If you look in the middle here, these year-over-year numbers, it's up 45%, after it grew 48, after it grew 46, after it grew 45. Like it's always 40 or 50% growth over here or year-over-year. And not just the subscription revenue. If you don't pay for their subscription, you have to, see ads, and their advertising revenue is also up 45% year over year. So pretty cool for Duolingo. Yeah, so it's actually the majority of their stuff sold is actually, or the most common language learned is actually English on there. So yeah, the rest of the world is most of the revenue. The US is only 41%, so you get some international exposure. The expectations are up and to the right, but they're not super cheap yet. That's the crazy part, the sad kind of truth. Even after this massive dip, it might look RSI on a technical analysis really oversold, but it's not super cheap yet. If we look on the right here, the forward PE is a 36. We look at the forward PE because they had a crazy one-time adjustment this quarter. It says the current PE is a 19. That's not true. They're actually at a 36 times forward PE. It says they made 290 mil in net income this quarter. They didn't actually. They only made 35 mil, but it still was a great quarter. And that's why I'm not just going to completely dismiss Duolingo as some AI loser that should never be looked at again. Like, I really love their subscription numbers, their fortress balance sheet, where everything's headed. But the sentiment is kind of bad. And with that bad sentiment and this 36 forward PE, it's not a crazy, insane goodbye yet, but I'd certainly maybe start nibbling on it a little bit. A little one there. So yeah, let's do, someone's been saying HYMC. Let's check out this one real quick. Okay, let's see here. Hycoft Mining. This must be a gold stock. Wow, they're up 7% on the day. Yeah, let me just double check here. Yeah, so it's a gold play. They own a gold mine. It looks like. So the Hycoft gold mine is what they own, and they don't have great revenue now. Oh, so that's old data here. But I'm guessing they're just kind of following the commodity of what actual gold is doing. So we can kind of see this crazy stock price appreciation. If we just look up gold, which is IAU, the commodity, check out the actual commodity of gold. So yeah, literally gold right now is at an all-time high. So if you got any gold chains, gold jewelry or something, maybe go hit up the pawn shop and sell it and raise some cash and buy stocks or something, because the price of gold is literally done insane. So congrats if you're in any sort of gold mining plays or just gold. Something great. Which company you're talking about? Oh, hey. I forgot which one we were talking about there. My bad. You can. What I love on YouTube is, by the way, best way to support me is just watch my YouTube stream. You can like rewind it on the YouTube stream. Hit the like button if you want. I've sell nothing. I have no course, book, WhatsApp. I don't coach. I'll never ever follow you or DM you. Watch out for people impersonating me and stuff. So Iziri says Visa. I love Visa. Nancy Pelosi's been adding to more Visa. It's actually in the Nancy Pelosi portfolio. Let's pull this up right here. So this one's been hurt by the administration's kind of proposed rule where they're trying to cap interest rates for credit cards at 10% for people in the US. So you can't really have a higher interest rate than 10%. And that will, just hurt Visa and these credit card companies the most. But if we just judge Visa for their numbers, I mean, this is one of the most quality stocks I've ever seen. And even though they like has done great, here's why they're cheap, and you should buy them potentially now. Not financial advice. The forward PE on the right's at 25. That's lower than the S&P 500. All right, like a 25 forward PE is so cheap. Like that, in my opinion, this is Visa. This could stretch up easily backed up to a 28 to 29 forward PE. Send this up another 20, 30%. So if we go to Visa's bottom line, they're printing money. They're easily making $5 billion of after-tax net income a quarter. Real after-tax net income. And what is Visa doing with $5 billion of net income a quarter? Well, here's the crazy part. They pay a dividend. The dividend only cost $1.1 billion, so they can easily afford to raise their dividend if they wanted to, but they're doing the smart thing. They're doing massive buybacks. If you look at the top, they're doing $4 to $5 billion of net income a quarter solely on share buybacks. So if you look at the net income actually fell 4.2%, but the net income per share only fell 1%. Because they bought back so much of their own shares. Whenever they buy back their own shares, it just gives you more ownership in the company. It makes the dividend go down, P ratio go down. What's your favorite energy stock? My favorite energy stock, that would probably be Constellation Energy, CEG. Hey, what up, Craig and Eric? Good to see y'all. Let me get to this one. Someone said CAN stock. I don't even know that was a stock. Ticker symbol. Okay. I don't know if this is the stock he's talking about. They're only worth, you got to be careful with these microcaps. We don't really like to cover these. So this company is only worth $400 million. They're at an all-time low. Let's see if we can figure out why they're at an all-time low. So yeah, it's just basic net income right here. So kind of think about this logically, or we'll round it up to 500 million. So let's say if in the top right, we buy the whole company for $500 million. This is kind of what you're buying. You're buying a business, like you spend the 500 million, and then in the first quarter, it loses you 27 million, and then 11 million, and then 86 million. 86 million, that's like 20% of the whole investment. And then 92 million, and then 75. So oh, wow. They have been losing a lot of money. Do they have revenue growth though? Let's hope. They do. Okay, so the revenue's up. Actually, that's good. That's great top line growth. The revenue's up 104%, but it's just this net income that scares me. 500 mil loses. But it's, then again, it's not the end of the world because they do have the top line growth. If they need to keep up that top line growth. But it's still a tough one. It's tough to trust like anything meaningful in this stock. I keep the position just very low. Hopefully that was somewhat helpful there. But these net income losses are really scary. And that's probably why the stock is where it is right now. Oh, sorry, my thing kind of cut out. We're back. Okay. Okay. Larry said ONDS. Hey, this is like an autonomous software stock or something like that. And I can see actually why the momentum has been in favor of this company right here because the numbers really have been good. This company is transitioning from a revenue-less startup to a company that's going to be making real money. So this quarter was a record. The revenue went from 1.4 mil to 10 million. Again, we're still messing with small numbers here, but 10 million, this is good. This was a record. So they did 10 million of revenue. And next quarter, it's supposed to be 27 mil of revenue and then 28 million. So if you kind of annualize this, they're going to be making like 120 mil of revenue a year when they used to make freaking 5 million a year. So it's just a huge transition that this company is experiencing. And that's why the stock has had such a rapid increase basically from zero. So I'd still they just fortify their balance sheet too by diluting you. So they diluted you by 400 million, but they can basically just afford to lose money for the rest of the time. And they're barely losing any money, only like 10 mil a quarter. But they beat good on this quarter too. They expected 7 mil, they did 10 mil. So pretty good. What's this app? Yeah, hey, Oliver, if you want to get this app, or it's actually a brokerage where you buy stocks on, a broker called Moomoo. If you want to get this app, or use my affiliate link, it's actually in the link tree in my bio, very first link there. So if you go and deposit $100, we'll both get some free stocks. But yeah, this is my favorite app to buy stocks on and analyze it. A lot of people just like it for the idle cash. You get the 3.35% APY on the idle cash. Okay. Um, Sorry, I'm a little behind here. SAN, please. All right. What is SAN? Are you talking about SanDisk or SAN? Banco. So this must be a bank stock. Well, the stock is this. Okay, the stock is the same price that it was in 1998, but the past year they've done incredible. They went from $4 to $12, so they have had a nice little recovery, specifically this past year. So they're a European company, so we'll convert the currency to USD just to get a better idea here. So yeah, retail and commercial bank. A lot of banks have been doing great right now. I think JP Morgan's nearly at an all-time high, but yeah, retail and commercial bank, that's most of their revenue. That's I like the other businesses too, like wealth management, digital consumer bank, corporate and investment banking. So let's see net income. Yeah, so this is in US dollars. They really are making 4 to 4.5 billion of net income a quarter. You can't make that up. So the revenue's down. So the revenue is down slightly year over year, but the net income did grow. So that means the margins grew. So dang. I can see why. Yeah, they're worth $180 billion. What's the dividend yield here? You get a 2% dividend yield. That's the same yield as JP Morgan. Yeah, a lot of banks have done incredible since 2019. Check out just a boring JP Morgan. They're boring, but they've done great. And with the credit card cap stuff, the JP Morgan. I think Trump. Oh yeah, look at this. Administration sues JP Morgan, literally sues JP Morgan for $5 billion over alleged political account closure. JP Morgan denies the claims anyway, something like that. Anywho, all right. I see SANM and TMQ's having a good day. Hey, should we check out TMQ stock? Or hey, Eric, if you got a stock you may look at, let me know there. We'll check it out for you. I don't know which one to look at here. Sagittarius says SANM. I think this is like a cable business or something like that. I believe they just had some sort of big deal. I totally forget what they did. I think it might have been with Google. I don't remember, but this is some cable stock right here, kind of like an Amphenol. Oh, they're about to report earnings, they're saying. The expectations are so good. Yeah, whoa. So look at the forward PE. They must have got some crazy contract where if you look at their right now PE ratio, they're like, that's expensive, a 40 PE. But when we look at the forward metric, forward PE, they're at a 34 forward PE. Pretty interesting right there. So so they do integrated manufacturing solutions. Let's check out are there analysts covering this? Yeah, look, this quarter was 209 or 2.09 bill of revenue. It's supposed to be 3.09 just next quarter. Incredible growth. And then the quarter after, 3.52. So that's incredible. So did they do like an acquisition or something? I really don't know, but something's causing the revenue to go up, and not just revenue, but yeah, EPS is going to go from $1.16 to $1.64. And the EBIT. So just everything's supposed to double. I mean, that's insane. So you're really watching the next couple quarters here. It looks like the stock really has, though, like priced in all that growth before today. But that forward PE is still cheap. What stocks do you like at current prices? Hey, that's a good question, Constellation Energy, I like at their current prices. Microsoft, I wonder if Meta is still an interesting stock at current prices. Let's see, what am I Progressive, I think, is still decent. AbbVie, should I go over AbbVie? If someone wants me to go over AbbVie, we'll go over AbbVie, but I really like AbbVie, Progressive, but these are kind of some like more boring stocks that kind of have high yields. PODD, are they the new like, I'm gonna add that one to they're my never sell. I'm gonna re-add them to the top of my watches. I could talk for days about this stock. I actually eventually want to make a video about that one. I don't own them, but I really do. They're so quality. They're quality. They're like Palantir type expensive though. Ashton said BUD. I can't really cover this industry, but let's check it out. I can't talk about what they do. This stock, unfortunately, this is that drink company. They're the same price as they were back in 2012. So you bought the stock in 2012. It's the same price that it is today. But yeah, they sell, I'll be super quick with this image here. I'm not really allowed to show this, but oh yeah, see, it's where you buy a drink where they ask for ID. They sell those products. Like they own, Well, some of their brands are being boycotted. Anyway, the growth has been kind of not great. I can kind of see why the stock has been flat for, forever because the revenue, it's only up 0.5. Last quarter was down 2%, then down 6%, then up 2%, then down 3, down 1%, 2%, 1%, 3. Like these are low single digit growth rates or sometimes negative growth rates that just doesn't keep up with inflation. So the revenue's flat year over year, and let's see the profits. So the profits are good that's a good thing. And they're in a tough environment right now. So like all food and drink stocks, Pepsi, TAP, Mondelez, they're all struggling right now, but they're still making they're not losing money. They're still printing a couple billion of net income a quarter, usually just around over a billion in net income a quarter. So what's the yield here? Warren Buffett has been buying a different one. Yeah, 1.62% dividend. You want to see what Warren Buffett has been buying? Exact same industry. I think it's STZ. Where is this in his portfolio now? He's been loading the boat on this one. Yeah, actually if we go to his newest position is actually Google. Pretty interesting. But he's been buying ticker symbol STZ. It's called, here it is, Constellation Brands. They own a bunch of beverages as well. Just like not just BUD I'm picking on, all these kind of beverage stocks have not been doing too well. This one's also the same price that it was in 2015. But they have a high yield too. Hey, what up, MC? An Odyssey boy. Dude, Odyssey for the 10 lightning bolts. No way, man. I appreciate those gifts there. He says, thoughts on Uber. Let's do Uber real quick if y'all don't mind. I love this one. Even at right now's prices. Can you do Lam Research? They make wafers. Yeah, we'll do for sure. And we got best, he said, SoFi, Micron. Okay, we're definitely getting to Micron, SoFi, Lam Research. I'm so behind, so I'm so sorry if you're saying a stock and I'm missing it. I really am going fast here. Try to only spend a minute on each company. We'll be live for another while. Ooh, check that out. Kroger and Uber expand partnership for grocery delivery. Interesting there. Uber's CEO announces AI integration and customer service. The customer service, I don't think has been too good on Uber, but that's good. Here's a really important metric. Their monthly active consumers, so not just monthly active like users, but consumers is 189 million, when the same time last year it was 161 million. So that has grown greatly. Everything's growing still. That's the thing. COVID's gone, post-COVID boom is gone, but they're still growing massively. Their main mobility ride-sharing business, ride-sharing is up 19%, after grew 26, after grew 38. They're just continuing that growth, and not just the mobility, but the Uber Eats business as well. The delivery business, Uber Eats, that's up 29 after 18 after 6. So the growth rate over here is actually growing. It's pretty insane. And maybe the Kroger partnership will grow that even more. So if we just judge this one off their numbers, they print free cash flow, literally 2 billion plus a free cash flow quarter. And at this growth rate, what's it going to be the same time next year? And not just free cash flow, but also net income. Record quarters here. If we look at the forward PE here, that's the thing. You don't look at their current PE. On the left, they don't trade at a 10 PE. They've had these two massive adjustments that make them look like they're at. Forget that. You really look at the forward PE, and even on a forward PE metric, oh my goodness, dude, ow. Oh, sorry. TikTok's making me fill out a CAPTCHA right at my moment. Okay, we're back. Sorry. Oh, and it just removed the chat. Did it? Okay. The forward PE is a 24. Even at right now's valuation, Uber is very fair. And that's why I would nibble on this stock right now. I would slowly start the dollar cost average at right now's prices. If you want Uber as 5% of your portfolio, don't make it 5% today, but make it 1%. They're that quality. I really do like Uber. Yeah, I don't think you'll be disappointed if you just buy and hold that one for the long run, buying at right now's prices. What are good stocks about under $5? Hey, that's kind of I never look at that. Actually, there's only one I think that I'd ever consider, NU Bank, or dang, it's $17 now. Well, anyway, the share price is irrelevant. The share price never matters because you can buy fractional shares on pretty much every brokerage. And I've been doing that on this stock right here, Ferrari's 336 a share. I've been buying 0.1 shares, 0.1. So, actually, that's the first stock we went over. I actually think Ferrari's at a decent price to start the nibble. Again, don't go crazy in it yet, but start that small position where the risk reward is starting to look good. I don't think it could go too much lower. So some people get the psychology wrong. Whenever a stock is up, at an all-time high, sometimes they'll buy more, think it's safer to buy because it's at an all-time high, but that psychology is kind of wrong. Okay. What was it? Oh, okay. Micron, SoFi. I'll be quick about Micron because we kind of already talked about this one. This is that memory shortage play. And Micron was coming out saying this memory shortage is supposed to extend all the way back into 2028. So there's going to be supply issues all the way till 28. Oh, here's kind of one thing. Micron warns of unprecedented memory chip shortage extending beyond 2026 due to AI demand. So just nuts. Micron's acquiring Taiwan fab site for 1.8 billion to expand RAM production. Check this out. This is why, even though Micron is technically on the technical analysis super overbought and it looks super expensive, it's not expensive. That's the crazy part. The forward PE is a 10, and that's not just some one-time adjustment either. If we look at the EPS here, EPS next quarter is supposed to be $8. And then $9. If we annualize that, that's nearly $40 of EPS a year. And yeah, look at the stock. It's 401. So that's a 10 forward PE in a perfect world. That's crazy. That's why this stock could potentially still have another 10 to 20% upside. And that's why if I was a shareholder of Micron, and I've been saying this for a long time, for many, many months, I would not be trimming. I would not be selling out of Micron at this current price. Because I don't think the rally's done. I think the rally's going to continue. But that being said, would I be buying at current prices? I mean, it's certainly really tough. Certainly nothing meaningful. But I wouldn't be shocked to just see it slightly go higher and higher. SoFi, yeah, let me get to SoFi real quick. This one I do own. I am a shareholder, so I'm totally biased here, but they are one I regret every share I've ever sold of. I super regret selling shares of SoFi. JP Morgan, I think, has been buying more shares. Yeah, JP Morgan, this was a new update from yesterday, now owns more shares than BlackRock. So JP Morgan owns over 5% of all the shares of SoFi here. But we just judge SoFi on their numbers. It's great. No analyst expected this. If we go to their financial services, which is the main growth driver, it's 44% of the total business now. This is unbelievable. Revenue's up 80 or pretty much 76% year over year after 101% growth, after 141, after 290, after 601. It literally just hits a new record every year, every quarter. Like even the quarter over quarter growth rates on the very right are all green. It's never red. I can't begin to explain how impressive this growth is. No analyst expected this, and we can see the analyst expectations down here. No wonder they're gapping up and going up so much because they keep beating on earnings. Every quarter, they beat on revenue, they beat on net income, they beat on EBIT, and the expectations are still just up and to the right. And if they beat 20% on that, the forward PE could potentially be even cheaper because it is expensive. I would not be buying SoFi here really with anything meaningful, but a 44 forward PE could potentially really be at like a 36 forward PE. So that being said, I don't love their current valuation, even though they're kind of a bit off their kind of $32 peak. It's still not a super steal of a deal right now, but I love the growth and I put them on the watch list and I regret every share I've ever sold to them because I don't have much position in them left. Yeah, so we only have 24 shares left, measly $600 position. Same with Robinhood. The metals company, hey, Odyssey, what's up, man? Thanks again for the gifts there. So, TMC, this one's a startup. Then we'll get to, hey, what do you think about PayPal, Salesforce, Adobe? I just did a big video on them, Sludgy. We'll go over them too. And then we got to get to Lamb Research. Nathan, this director must be ready to offer by the company. Wait, hey, what stock were we talking about there, Michael? And good to see you, Michael Anthony. Hope you're having a great Friday. You know, I think I saw you in Meet Kevin's live stream chat the other day. I think I saw you over there. Was that you? Okay. The metals company, this is one I'd be careful with. They basically are making, I actually used to own this company. I used to be a shareholder of this stock. This, in my opinion, is a swing short-term kind of momentum trade. You don't really buy and hold this one for the long run, but they make these underwater robots that go to the very bottom of the ocean floor and suck up all of the rare earth minerals, the nickel, the zinc. They suck it all up and it keeps it, it collects it. And it, again, startup, nowhere near any revenue. We can go to the data right here. The revenue, it says no data because, again, they're a startup. They've never sold anything, never sold a product or a service. Far from it. And that's the killer here. I would rather sit out, potentially wait for this company to 3x and them actually have a real product than buy the stock because they're still, especially at this stock price, the risk to reward does not look good buying this company. A $4 billion company now. This makes Dave, ticker symbol Dave, look like a steal. And here's the other bad news. So the revenue is zero, and they just lost just this quarter $280 million net income. And look what that did to their balance sheet. Whenever you lose net income, that money has to come from somewhere. So look at what their balance sheet happened quarter over quarter. The liabilities specifically went, they went up like crazy on top of diluting you. So they're doing the smart thing by issuing shares at this current price to pay off debt because they're losing a lot of money. But I'd really want to see some crazy good updates and progress here, but I just don't think they have that. Anywho, that's kind of the metals company. A startup, just be careful with them. So LRCX, shout out to Alpha Auto. He says they make wafers for Micron. Hey, if Micron's a customer, they have rocketed the past couple months. Yeah, let's see if there's any news down here. Lam Research to announce earnings. Multiple analysts raised price targets, citing strong semiconductor growth and AI demand. Supply-demand dynamics. All right, let's go check it out right here. Strong outlook. Okay, what's their multiple? So expensive valuation. Obviously, as the stock price goes up, the valuation gets more expensive. And super congrats if you own this one, but I kind of wouldn't buy today, a 43 forward PE. Not really cheap. Actually, NVIDIA, you want to guess NVIDIA's forward PE, basically priced, it's like a 28, 29. So this makes NVIDIA look like a steal. If I was going to buy one at all-time highs, if I was going to buy Lam Research at all-time highs, I kind of rather buy NVIDIA at their current prices. But Lam Research is still super growthy. The revenue's up 27 and the net income's up 40. No way. The margin expansion. So the revenue's up 27, net income's up 40. So that means the net margin grew from 26 to 30. They now, at this growth rate, they're going to be having a 30% plus net margin always. That's crazy. So they've just had massive EPS growth. Yeah. So they bought back, no freaking way. They've bought back 5% of all the shares the past year. So on top of paying you a 0.5% dividend and growing just the business, beating on every expectation every quarter, beating on revenue, beating on EPS, beating on EBITDA, they've bought back 4.5% of all the shares. And I'll show you that number. Let's see how much they spent. A stock issuance. Yeah, look at the top here. They spent $1 billion this quarter, 1.3 billion, 500 mil, and 700 mil, just buying back their own stock. And they bought back all that stock at a way lower price than it is today. Pretty cool. Pretty cool. Oh, SANM partnered with AMD. Okay, check out TMQ. Let's do it, Eric. Trilogy Metals. This must be one of the rare earth mineral plays because they kind of spiked up when MP Materials did. And the other one, yeah. Thoughts on Roblox? I don't like Roblox stock because of the net income losses. So, yeah, that's the sad part. Thoughts on covered calls? Yeah, covered calls are great for making income. I'm always a fan of selling calls yourself instead of buying a covered call ETF because the fees and associated with all that. So yeah, I love selling calls, but I don't sell calls because I just don't need income and I don't really want to buy a stock. I'm not going to buy a stock for the sole reason to sell calls on it. Or, maybe an oil stock would be good for that. Oh, but I want to let my winners win. And check this out at the top here. They have a 1.07 bill market cap. So a very small company, $1 billion market cap. They have no revenue. So startup, yeah, if we go to revenue, says no data because they've never sold anything, but they have no liabilities at all. Look at that. Look at that balance sheet, man. No liabilities. So that's great news. So yeah, as they're losing 1 million, 3 mil a quarter, they can easily afford that. So we're just kind of waiting for this company to finally start selling a product. I wonder if this one was one that it's like a rare earth mineral play that the government maybe is taking a stake into. I don't know. It's like they've found some zinc and copper to be mined. Who knows? Here's kind of their website right here. But yeah, some sort of rare earth mineral plays. Oh, wait, did that say 5 employees? Yeah, look at the middle here. Employees, 5. So I'd just be careful just because they're so small, but that looks like a pure kind of rare earth mineral play. Dave's still a good buy despite, yeah, so despite new 10% credit card max, that actually might benefit Dave. I don't know. So check this out. This is an interesting stock. I do own this one, but the valuation is cheap. Like, simply put, I mean, the forward PE is a 15. The current PE is an 18, but that forward PE is a 15. That's for the growth this company has, that's so deserving in my opinion. The revenue's up it's $150, up 63%. And out of this 150 mil of revenue, they netted 45 mil. So here's the bottom line. These are the profits that they're making. we zoom out to last year, it was a tough buyback here. They were losing a little bit of money, but now the actual net margin over here, so this is like a 30-40%. It's crazy. So yeah, this had this little adjustment here, but the profits, excluding that adjustment, like just this number right here, unbelievable. That's where that 15 forward PE comes from. Deleveraging the balance sheet. So the assets are growing, but the liabilities are staying flat and going down. And same with the free cash flow. Oh my goodness, the free cash flow is so good here. So I have a few videos. I wonder if I can find one of my old videos. Oh, yes, other people own Dave as well. Oh, there's no way I'm gonna find it. Dang, there's a lot of comments on Dave. Oh yeah, hey, look, these are some old videos I made about Dave. Okay, anyway. When I first bought them. Paramount, hey, yeah, and I see Powell too. Would love to hear about Nebius and the shipping microcap CIS. So yeah, Nebius, maybe we can just cover that one. I'll be quick about this one. This is a data center stock. So sadly, I'm not too bullish on this one. Okay, sorry. This is a data center stock. There's nothing proprietary here, sadly. Like that's why I avoid these kind of data center stocks like CoreWeave. I think they're still going to do great through 2030, but they're kind of the bag holders in the long run. They simply just own NVIDIA Blackwell chips in a data center. They just own a bunch of chips. And these chips right now are in such demand. They're in such demand right now that they're renting out their capacity of the GPUs. They're renting it out to cloud computing companies like Microsoft. I believe Nebius. Yeah, they did. Nebius got a $17 billion contract with Microsoft to rent out their extra GPU usage and stuff. So that's why the stock, bumped up so much on that day. So the top line growth is going to be there. So yeah, look at the expectations. Revenue is going to go from 55 mil to 470 million in 2 quarters. Insane top line growth. And it's already great. It's already triple digits for the past 5 quarters in a row, but it's just going to continue to grow even faster than that. But they're still supposed to lose money. It's just like that. And actually, this could be good news. Jim Cramer is short this stock. Jim Cramer, he also talks about this depreciation thesis. Basically, they've bought these super expensive NVIDIA Blackwell chips that in 15 years will be worth literally nothing. So they have this like depreciation curve, and it's interesting. But I'm not a crazy big fan of Nebius, to tell you the truth. DMV says, can we review ENS? Let's do this one. Intersys. This must be, I'm guessing, an energy utility stock. They've done great the past year. I mean, just every single day it like goes up 0.5% on average. I will pull up the Heiken-Ashi candles. Let me do that real quick. This chart just looks great. So let's see what they do here. So yeah, energy systems, motive power, and specialty. Actually, the specialty is probably a high margin here. These like specialty projects. Let's see, their core business, energy systems, that's up 13%. So it looks like the growth is finally back. And they've been beating on expectations too. Revenue was 890 million. They did 950 million. A massive beat on revenue, slight miss on EPS, but they beat on EBIT. So that must have been a one-time adjustment to the net income. So yeah, the revenue, this was a big beat. It only grew 7.6%, but they beat like crazy. So they beat on revenue, and the profits did grow as well. So the profits are up 11%. So yeah, they did have an adjustment to the net income this quarter. Like they are profitable. They are making 50 to 100 mil of, actually like 60 to 100 mil of real net income every quarter. Hey, Jello, thanks for that gift there. I appreciate you. And I've been asking about AMTM. Yeah, hey, sorry about that. I'm trying to get to all the stocks here. I apologize. We'll definitely get to that one. And yeah, look at the payout. Wait, so the PE ratio is cheap then. Yeah, dang, a 16 forward PE on ENS. And so they pay a dividend, a 0.6% dividend. The payout ratio is only at 10%. They kind of remind me of a PSIX. I've been kind of talking about PSIX today. They're up, or we're up 19% on them now. But PSIX is another kind of specialty like energy module play. But there you go. They have a dividend too, which is pretty cool. Yeah. Hey, someone said, was that YouTube or what did he say? Yeah, that's TikTok giving me all the issues. Yeah, TikTok, they removed my stream from the For You page eligibility. So I just thank you to everyone on the YouTube stream. I appreciate y'all. So the viewers are just going to slowly go down, but it's whatever. Powell, yeah, hey, Chance, I see your Powell. Don't worry. We'll definitely get to Powell I own that one. Oh, and Grab too. Well, for sure. So, did someone AMTM? Wait, huh? Did someone even say AMTM? Wait, I don't even know. Okay. Hey, what up, Mike Murphy? Good to see you. I hope everyone's having a great Friday. I hope y'all are having a great day. I'm definitely keeping all my Micron stock. Yeah, the fundamentals like just so good. Should I buy even more, Dave? I'd keep the allocation of Dave kind of small. But I'm certainly not selling out of Dave. Okay, well look at Powell too. Paramount after the UFC deal. Oh, really? That's who gave TKO the money. You should look at TKO stock. Actually, I'll look into that after this. So actually, we're not going to cover this company right here, sadly. Or if you look in the top right, they're only worth 11 million. So the whole entire company is worth $11 million. Just so tiny. But they do sales of safety alarms. So they sell, kind of a commodity safety alarms. Here's kind of the annual revenue here. Did bump up. It was a record 2025 sales of 21 million of revenue. But they actually net lost money. If we go to the current PE ratio, it says the PE ratio is a 10, but that's kind of deceiving. It's not actually a 10. It's really like 100 or 200 or something, because they basically just made the slightest bit of net income. They didn't actually make this million of net income the past 2 quarters. They actually lost money. So that's one thing you got to be careful with you. Oh, hey, okay. Oh, I'm so stupid. Oh, yeah, AMTM. I thought someone said that stock, and I just didn't. Okay. Oh, gosh. Okay. Amentum Holdings. Let's do this one right here. Yeah, but that one could be interesting there, Michael Anthony. Safety alarm, microcap play. So Amentum Holdings, they are worth $9 billion. So they're a pretty big company. Let's see, is there any kind of news around this stock right now? Oh, so they just reported earnings, and that was a phenomenal beat. Whoa, that must explain why the stock, yeah. No wonder it gapped up so much on earnings day, because the earnings were such a big beat. They expected 3.6, they did 3.9. So they beat on revenue, they missed on EPS slightly, and they missed on EBIT. But the top line growth really did grow 77%. And they're profitable. They're now making, this is the before tax number, so maybe remove another 20%, but they're making really around 100 million net income a quarter. So you really look at a forward PE. So what's the forward PE on this one? Okay, so yeah, right now it says the PE is 131, but the forward PE is at 35. So it's starting to make it look a little more cheaper. So global engineering solutions, digital solutions. So yeah, we want to see them just continue this growth. I mean, it might be a bit cyclical, or I don't know. Let's actually check out their website just to get a slight bit better idea of what they do here. Amentum.com or nuclear reactor delivery partner. So check this out. Maybe it's some nuclear play. Nuclear capability program, or number 1 military friendly employer. So interesting there. I don't know too much about what they do, but it seems interesting. Digital and global engineering solutions, data-driven intelligence analytics, space systems. So anyway, I can see why they gapped up on earnings, because they did have a good earnings report there. Sorry, that probably wasn't too helpful there, but I'll do Powell. I saw someone been saying Powell a bunch, so let me do Powell real quick. I've made a lot of YouTube videos about this stock, but here's what I love about them. If you look in the top right, the market cap, they're worth $5 billion, and the forward PE is a 27. That's why, even though if we look at the stock, they're at an all-time high right now, and I'm a shareholder, I'm not even trimming or selling this stock because they're not expensive. So they're at a 27 forward PE, and also they have no debt. They're a debt-free company with $475 million of cash. So literally, basically 9.5, just call it 10% of the entire market cap, 10% of what you're paying is just their net cash on hand. And since they have no debt, that $475 million of revenue or of cash earns them interest. They make 3 to 4 mil or 4.3 mil of interest, and they pay a dividend too. That dividend only costs legit $3 million. So the interest they make on their cash freaking covers the cost of the dividend, which is just insane. And, even not even including that, they make 40 to 50 million net income a quarter. So they can just easily afford the little $3 million dividend, 0.26% yield, even lower payout ratio than 7. That's off the last full year. Look at these expectations. Like every quarter they beat, like just basically, this is EBIT, earnings before interest and taxes. They expected 56, they did 63, or they just beat every quarter. So pretty cool. That's Powell Industries. They also have a backlog, a $1.5 billion backlog. They're a switchgear solution company, and they do these specialty network kind of electrical infrastructure projects. Their average, they do have these switchgear solutions, basically. These high voltage switchgear solutions for like data centers have been really growing, but like utility companies, oil and gas companies all use their solutions. So they're pretty cool. You sell out of CEG? Absolutely not. I'm looking to actually buy more CEG. This is a never sell stock for me. I don't plan to legit ever for the next 10 years or even longer, like ever sell CEG. I'm looking to buy more of CEG. This stock is a steal of a deal at current valuations, in my opinion, not financial advice. How's the market doing really quickly? We haven't even looked at my portfolio in a while. So we're down 0.5% on the day, but look at that. We're down 0.5%, but the QQQ is up 0.5%. The S&P 500 is flat. So we're actually doing a little bit worse than the market, but no big deal, you know. Yeah, United Rentals and Carlisle are kind of dragging me down. What about our Roth IRA? Are they? Oh, well, they're not green either. So we're down 0.67% on the day. Okay. Sorry. And this one's down 0.37. So we're just underperforming. Okay. Zarko said Oracle. You know what should we do? Oh yeah, let me do TKO. I said I'd get to this one real quick. So someone's been saying Paramount Skydance. So Paramount Skydance is basically paying TKO Group right here for the licensing rights of the UFC or the WWE, I believe. So what is this company? This is a perfect ticker symbol TKO. This company literally owns WWE, so the World Wrestling, and also the UFC. So if we go to their net margins right here, this is the crazy part of their net income recently. They've been licensing out their content to companies like Paramount Skydance, and they just basically collect 100% margin, basically licensing / royalty fees. We can see the EPS projections. This 2 quarters is going to be insane. $1.58 of EPS. And look at the revenue. It's supposed to go to 1.9 billion. That's an interesting quarter. Like if I was a shareholder here, I wouldn't even be selling out of TKO because I'm going to just guess the forward PE is like a 30 or let's see, a 22. Look on the right there, a 22 forward PE for TKO Group. And I think they pay a dividend too. A 0.75% dividend. I'm actually going to put them back to the top of my watches because it's this kind of company, even though the stock has already done so good, that 22 forward PE implies to me that there might even be more upside. So that's pretty cool. Yeah, I saw like 2 people said Oracle. Yeah, let me do Oracle real quickly. So Oracle, this is, stock is not done too well. This is a cloud play. They have the 4th largest market share. So the number one, this is a pure cloud play, I should say. It's because the number one market share cloud play is Amazon, then Microsoft Azure Cloud, then Google Cloud, then it's Oracle. So Oracle has around like a 6-7% market share right now. They're kind of cheap, a 32 forward PE, but here's the thing. Google is at a cheaper forward PE, and Amazon's at a cheaper forward PE, and Microsoft is. Microsoft's at like a 28. Like Microsoft is a steal of a deal. Even though it's not a pure cloud play, it's a software and cloud hybrid there. But yeah, cloud revenue right here. Did they beat on revenue? So they actually, this quarter, they missed on revenue. They had a one-time adjustment to their net income, and they missed on EBIT. So here's kind of their profits right here. So they really are making $4 to $5 billion of real after-tax net income a quarter. Well, probably around $4 billion. But they're highly leveraged. They have well over $100 billion of total debt. But Oracle has been getting a lot of big contracts. They have a massive $200 billion contract with OpenAI, where OpenAI still hasn't paid them like $150 billion of that. So OpenAI is actually, this is crazy news. OpenAI just went to Amazon for their cloud services because they couldn't get it all to Oracle. But Oracle just won they got a 15% stake in TikTok. So for everyone on the TikTok stream, that's kind of cool, I guess. They have a 15% stake in TikTok for just the US business, I guess. And they keep like the data on Oracle servers. But let me see if there's any more news. Yeah, here, Lawrence Ellison right here. That's the guy backing the Paramount Skydance deal. He owns 40% of all the shares. He's one of the richest people that exist. He's owns 40% of a $508 billion asset. So he's worth, his stock is worth 210 billion or something crazy like that. But Oracle, I just don't love the same way, or I just don't feel too confident in it at its current valuation. Like I just have like bad vibes from it. So I really don't know. I just be cautious on Oracle right here because there's good news, bad news. Oracle expands Nashville headquarters with plans for 8,500 jobs by 2031. Cool. So yeah, if you like Oracle, you also love Google and Amazon. And I've been buying more Amazon stock as well. Kind of looking on a weekly here. Those are my buy orders on Amazon. Um, yeah, hey, UZ says, why is Sprouts Farmers Market doing so bad despite the good numbers? Exactly. It's just the sentiment around Sprouts Farmers Market right now. And that's actually one I've been buying a slight bit more of. But yeah, I know what you mean there. Prosad said FTNT. This is a really cool cybersecurity stock you guys can put on your watches. And they're up 5% today. I actually just made a YouTube video about this stock. Let me switch back to the hollow candles. But yeah, they gapped up today. Did they report earnings? I don't even know. I think they're just like up on no news. TD Cohen upgrades Fortinet to buy. This is Fortinet, a cybersecurity stock right here. Wait, what was that news? China directs domestic firms to stop purchasing Fortinet cybersecurity products. That's how you know their products are good. But that's certainly not good sentiment. That's not good for their bottom line or whatever. Let's see how much of the revenue comes from China. Ooh, so look at that. The US is only 30%. But again, I love a subscription model company. 40% of the revenue is their subscription business, and it's growing nicely. This is what you want to see for a stock you just want a diamond hand. It hits a new record every year, every quarter. And I'm a super big fan of cybersecurity because as AI gets better, hackers will utilize it and get better with it. And it's not like this is some like startup, like they're already super profitable. They're making 400 to 500 million of real net income a quarter. And they're growing top line double digits. So are they doing 90 acquisitions? Yeah, kind of. So pretty cool. I just made, if you want more analysis on that one, my most recent YouTube video, I called it 10 software stocks to buy now. Hey, that's the best way to support me. It's just my YouTube channel called Nathan Robert. Just type into YouTube Nathan Roberts, also in the link tree in my bio. But I do a deep dive on 10 software stocks to buy now because a lot of software names are at new 52-week lows, like ServiceNow. Ooh. Oh, hey, Jeff Mack. Hey, shout out to the member Jeff Mack. He's an OG. He says MOVE stock. Wow, they're up 130% on the day. That's a crazy chart right there. Let me read what this article says at the top. Shares are trading higher after company announced that Corvex, which has secured a long-term NVIDIA H200 GPU deployment deal. Well, I don't know. Maybe we can check the comments right here. Some sort of NVIDIA deal. Do they have revenue right now? So if we go to the revenue, so no revenue. I mean, they did 80,000 of total revenue this quarter, and they lose a couple mil of net income. I mean, so that's not a great balance sheet. Like if we zoom out, I can see why this stock has done so bad before today because these numbers are bad. They now have more liabilities than assets because whenever you lose net income, 4 mil, 5 mil a quarter, those numbers have to come from somewhere. So that's why their liabilities just spiked up and their assets go down. So we really kind of want to see that new NVIDIA deal really change the fundamentals. And it looks like that's the sentiment. Like the sentiment's already in that favor. But I would just be so careful with that one. I wish I could give you more fundamental analysis on that one. All I could kind of give you some sort of short term. If you got another stock you want to look at, let me know there, Jeff. I appreciate you. Yeah, Nathan on Fidelity on UUU, 2 different funds bought on Tuesday. Some type of takeover could happen since all these shares being bought. Universal Safety Products. I don't know about that. I mean, hey, if someone buys the company, it wouldn't cost much. It's only a $12 million company and they sell safety alarms. Maybe like certain codes will force them to, or forces people to buy these alarms and stuff. Yeah, let me pull up AMD because, what's up, best? AMD, wow. They're nearly at an all-time high today. I am a shareholder of AMD. I certainly would not be buying AMD at this price. But let's see, what was the news? I really forgot. AMD expands integration in PCs and data centers to drive growth. Analysts highlight key factors in AMD's 2026 growth. I really forgot the news. They gapped up back here. I think it was some sort of partnership. I don't know, but AMD has just done great. Yeah, there was some sort of news back here. But yeah, let's just go judge the company. They're expensive, certainly at current prices at a 75 forward PE. The current PE is a 128, so that's certainly a great improvement, though. So there's still a lot of EPS growth happening. They're getting there this year, 30% EPS growth. So that's really the trend, and then we'll see this decline to maybe like a 40 next year. But yeah, big data center company, that's half the revenue. Then their client and gaming business, that's up 72% year over year. And their main data center business is up 22% after 122% growth. So just even continuing that growth. They beat on revenue this quarter. They beat on revenue, beat on EPS, and they beat on EBIT. So they had a triple beat quarter. And I love this balance sheet. Like, I just like their financials. They're really expensive, and I'm certainly not buying them right now, but great balance sheet, no net debt at all. And the free cash flow is insane. Yeah, if we go to the actual free cash flow metric, not just the operating cash flow, yeah, the free cash flow is up triple digits like every quarter for the past couple quarters. So yeah, 1.9 bill of free cash flow, 1.25 bill of net income, revenue's up 35%, beating on every metric. So I can totally get why AMD is doing so good. And also, one of the reasons they gapped up so crazy on this day was AMD basically got our OpenAI. OpenAI owns 10% of AMD now, and they're going to be buying a bunch of AMD chips kind of to train their LLM. Oh, I forgot to get to grab right here. Sorry about that one, Luffy. Let's do this one. What factors do you actually stand on to choose a stock? There's so many great factors, like profitability, growth, strategic moat, you know, do they do dividends, buybacks, synergistic M&A? I take so much into factor. Like, what's the free cash flow and stuff? So here's Grab. I call this the international Uber because they do exactly what Uber does, but just all around the world. The exact same thing. And it's a pure international, basically, play on this ride sharing commodity. Here's where the revenue comes from. Malaysia, Indonesia, Singapore, Philippines, Thailand. So it's an international Uber, I like to call it. And Uber's the largest shareholder now. That's the cool part. If you're a shareholder of Uber, you also, own 13, or you own this one indirectly. But I like that Uber's doing these acquisitions where Uber's the largest shareholder. Toyota Motor owns 5.5%. So Uber and Toyota Motor only want to see this company succeed, especially Uber, because they're the largest shareholder. They're the most to benefit from the stock going up. And they're doing great. The fundamentals are great here. Revenue's up 21%. What's the growth expected? Yeah, revenue's supposed to go to 950 and then 920, and the EPS is supposed to double. So I really like this name. They're probably a little expensive because they just got EPS positive. Yeah, but it's going from 230 to 58. That's a great improvement. It's really the rate of improvement. You really look at a multiple, year out multiple, a PEG ratio. You just add in the yearly growth rate, and they're doing this year's 30, 40% growth. So I really like Grab. Yeah. And I like Uber. Uber and Grab are two great stocks to buy, I think. Okay, let's see here. Look into um Prop Prairie Operating Co. PROP. Let's check that one out. Thanks for checking. Yeah, hey, no problem there. All right, let's see here. Prairie Operating. So this stock is pretty much at an all-time low. Yeah, hey, what up, Fitness? We'll look at ARIST or ANET and I see Alumis. Hey, what's the ticker symbol for Alumis? And D-Wave Quantum, CISS, Shipping, Microcap. Hey, maybe we'll get to, and Chipotle. Okay, we got a lot of stocks we got to get to. These are good. So Prairie, yeah, very small one. They're only worth $111 million. So that's a very small market cap. So you just want to be aware of that. So it looks like an oil and gas play. How they have 19 employees. So just know they have 19 employees. So, energy-focused company, committed to responsibility. So here's their website. I mean, they have like a investor presentation or something. I guess here's their investor presentation. They have one. You know what? Let's look at their investor presentation right here. So acreage, I guess they maybe collect royalties from their land. Projection of cash flow, record adjusted EBITDA. I could go through the. Hey, I always like to look at the investor presentation of stocks just to get a better idea here. They're partnering with Williams and Black Diamond, Phillips 60 or Phillips 66. So, anywho, let's go look at their actual numbers because that's what matters. So, The revenue that so they basically are just now getting revenue for the first time. So they did 77 mil of revenue, and on that 77 mil, they actually, and this was real, they're net income positive for the past 3 quarters. They used to lose money every quarter because they had no assets, but now the gross margins are actually really good. Dang. Huh. So like the net income to common holders is a little lower or a lot lower than the actual net income. So that's one thing to be aware of. So they must have bought some sort of asset, or yeah, they basically spent $600 million buying some sort of asset 3 quarters ago. That's why their balance sheet kind of hiked up and it's finally making them revenue. 77 mil of revenue, supposed to go to 128 mil in 2 quarters. So watch out for that. I'd hold this one for a little while. I wouldn't probably, well, it's still tough. It's a tough one. Let me do Arista Network real quick. ANET. ANET. Okay, so Arista Networks right here. This is another phenomenal growth stock to put on your watch list if you're looking for one without a dividend. But this one's really impressive because they sell. It's like these data center component stuff. But if we just go to the revenue, this is what you want to see. Let's check out the annual revenue. Yeah, it just grows every year. It's up 27% after 19% growth, and after 28% growth, after 58, after 24. So they're just on a streak of growth for the past couple years, and not just the revenue, but also the bottom line. So they did 2.3 bill of revenue, and on that, they netted. And after tax, after they paid 120 mil of taxes, they kept 853 mil every quarter. And it only grows. So at this growth rate, what's it going to be the same time next year? This is a growth stock that I would absolutely trust. They're expensive, but they deserve an expensive valuation because they're retaining so much net income. And then what about free cash flow? They're making even more in free cash flow a quarter. That's just insane. And the expectations are up and to the right. Like this was a record quarter, but it's supposed to hit another new record next quarter, and the quarter after a new record. And same with EPS, and they always beat on EPS. So maybe we can do a quick check on their website right here just to see a little bit more about Arista Networks. Arista AI ecosystem. I guess maybe these are some of their brands, or anyway. Here's its solutions include EOS, a set of network applications, a gigabit Ethernet switching and routing platform. So anyway, some sort of network hardware company, something like that. Maybe we can check out the Morningstar research right here. Oh, we do get that. It's kind of what the Bears and the Bulls say. The Bulls are saying Arista Networks has gained a top market share position in high-speed switching, resulting, in our view, from technology leadership and continuing to gain share. Arista holds the best-in-class profit margins and earns robust profits, reflecting a strong value proposition. Arista earns, crazy free cash flow used for organic reinvestment and shareholder returns. So I guess here what the Bears, we shouldn't even read what the Bears are saying. We see higher competition for Arista within generative AI spending, with NVIDIA holding a large incumbency via bundles of proprietary networking equipment with its GPUs. Arista's acquisition history is small and new. That's not a big issue. I'd love to see them do some acquisitions. ALMN or ALMS. Let me check out this one for you. Oh, they're actually on my watch list. I don't remember why I put them on my watch list, but there was some sort of crazy news this day, and I'm forgetting it, but you can see the volume at the bottom spiked up, and the stock has been up ever since. There was no earnings. There wasn't an earnings report, but there was some sort of news that dropped that day. Without that context, that's unfortunate. I'd like to see, an insider bought 588,000 shares for $10 million. Well, the whole company's worth $3 billion. So he actually bought like a good chunk of the shares. Anything else here? I just can't find that news, sadly. But there must have been something good. Well, who's a shareholder here? No one really. So they have no revenue. The revenue is $2 million. They're losing a lot of money. So there was some reason I added this to my watch list. I don't know. It's a biotechnology company, transformative medicine and autoimmune disorders. I wish I could. Maybe they had some sort of positive FDA results there. I remember seeing an insider buy a lot of shares. Well, hey, maybe that was the news, but I don't think that would have been the sole reason to make the stock go up so much. I'd have to deep dive more into this one. But yeah, it's a $3 billion company, still with just a very small amount of revenue. I don't think the risk to reward is great at this current price. So yeah. And CPRX. You know what? If you like healthcare plays, here's a really, really cool healthcare play. That's great. So the other stock was at an all-time high. This one's also kind of at an all-time high, but check out the numbers of this one. And that company we just looked at was worth $3 billion. I think this one's worth around that too. Look at that exactly. Okay, cool little coincidence here. The same market cap, exact same valuation, and actually slightly cheaper. The market cap of this company is $2.93 billion. So that other company had $2 million of revenue this quarter. Well, this company did $158 million of revenue. And on this 148 million revenue, and on the 148 million revenue, they legit netted in real after-tax net income after they paid their 15 million, actually more than that, taxes. They keep every quarter over 50 million net income, and these comps look great too. So at this growth rate, what's it going to be the same time next year? So they're actually making not just, the other company was 2 million of revenue. This company makes 200 million of net income a year. And on top of that, an extra just huge cherry on top is this balance sheet. No debt. That's just a lot of risk off the table. So it's a $3 billion company with the $689 million of cash and no debt. So already 20% of the market cap of what you're paying is just their cash on hand. Over 20%. So X cash PE multiple. So if we look at their current multiple, it's a 14. You can subtract another 20% off this from their cash. And we could also look at their inventories and subtract even more when you subtract the inventories that they could sell. So this company basically sells 3 different prescriptions here. For Dopsy, I don't know how to pronounce it, 62% of the revenue. Look at the growth. This is what you want to see. It's up 16% after 19, after 15. So that's at a record. 92 million of revenue, highest quarter ever. And that's just one prescription. They also sell like a Compa, whatever that one. So do beware. Look at that one. That one's down 25% year over year. That's their smaller one. And then they have Agamari. Whoa. They sold none of this same time last year. The revenue was $1 million, and then before this $1 million, it was 0. So basically went from $1 million of revenue in a year to $32 million this quarter. And if we annualize this number, that's why the forward growth, they're still and they've been beating on expectations every quarter. They expected 136, they did 148. So they beat on revenue, beat on EPS, beat on EBIT. So if you're looking for another kind of smaller market cap healthcare name worth $3 billion, maybe check out CPRX. Yeah, hey, UZG says, I love that one. CISS, someone said, shipping microcap. I have another shipping company you'll really like. If I don't like this one, let me see if I can find CISS. Oh, we found it. C3I is okay. Yikes! No, I haven't seen many smaller companies than this. If you look at the very top right here, the whole entire company is only worth $380,000. That's the whole. I mean, I'm sure someone in here could buy the whole company. The whole company is worth $380,000. We just don't really cover these kind of stocks. Yeah, the revenue is down 50% year over year to $4 million of revenue, and on that $4 million of revenue, they lost $3.5 million. Yeah, look at the profits. When all the supply chain issues were there, they were making a lot of money. Now the profits are gone. They still have a good balance sheet, though. Let me go to their website real quick there. Marine shipping company, maybe some sort of ocean freight cargo company. So, international shipping transportation company, bulk charters. Okay, so I don't like this one. If you're looking for a cooler one, a lot of people know Zim as well. A lot of people know Zim, but I'm going to give you a hidden gem one. A lot of people know Zim as well. This is the best one that exists, in my opinion. I've looked at all of them. Is GSL. And I know you're thinking, it's at an all-time high. How am I going to buy this thing? Here's the crazy part. Here's what even though they're at an all-time high right now, if you buy them today at their current stock price, you still get a 5.4% dividend yield. And I know what you're thinking, hey, is that dividend yield unsustainable, 5.4%? I'll do the math and show you yourself how they really do You see that payout ratio of 17% in the middle? They really do only have a 17 to 20% payout ratio for a 5.5% dividend. So look at the revenue over here. It's way more consistent than a Zim. If you look at ZIM or that other company, it's like negative and really choppy, but this one is super consistent. And same with the net income. If we look at the net income, we zoom out. We're scrolling back years at this point. It's always 50 to 100 mil in net income every quarter. So it's super consistent. So look at this. This quarter, they made 95 mil of after-tax net income. So they made $95 million. How much does that 5.5% dividend cost? Check it out at the top here. This is the exact number. I like deep diving into them. The dividend only cost exactly 21 mil. I don't know why I was reading some in the chat. The dividend only costs 21 million a quarter. So the dividend costs 21 mil a quarter. And again, they make 95 to 100 mil a quarter. So they can easily afford that. And since they have so much leftover money, they're actually investing into the future. If we look at their cash from investing activities, they just spent $188 million on 3 ships. I kid you not, this $188 million they spent, they bought 3 new cargo ships for them. So yeah, check this out right here. This is a global ship lease. Again, another just pure cargo ocean transportation company, but they have a safe dividend, the consistent revenue, consistent net income, good valuation, good everything. So anywho, I can see why this one's at all-time highs. I wouldn't go crazy in that one. And I don't love that industry is like a crazy big portion of your portfolio. You probably want to keep that as a small size position, but if I was going to own a shipping ocean company, I'd check out that one. Thank you for recommendation on GSL. Yeah, hey, thanks. Yeah, hopefully that's what I try to do. I try and hopefully introduce you guys to some new companies you probably never heard of before, because I don't want to just always keep covering, Google and Apple over and over. I like, okay. All right, let's look at a few more here. Then I got to run. We're almost live for 2 hours now. Hey, if you wanted the follow button, we stream every day. And hey, shout out to the homie Ran. Thanks for the gifts there. Yeah, TikTok earlier removed our For You page eligibility recommendations, so the viewers are just cooked. They're just been spiraling down since the beginning. So, but I appreciate everyone that's here, and especially everyone on the YouTube stream. If you guys got any last minute stocks you can look at, let me know. Can you cover Constitution Energy? I've actually never heard of them. If you give me the ticker symbol for that stock, I will check it out for you. Kindly look into QBTS, D-Wave Quantum. I will happily do that, but I will kindly look into them. And I'll say what I mean in a kind way, because this is one of the worst stocks, I think, from a valuation point of view. This is a momentum swing trade stock. In my opinion, you don't buy and hold this one for the next 10 years like you would the S&P 500. This is a stock you buy and eventually sell out of. You trim it. They don't really have any fundamentals yet. I can't believe this. This is a $9.5 billion company. If you look at the very top right, the market cap is $9.5 billion. I know a lot of companies that are worth $5 billion, $4 billion, $3 billion, and that just have insanely better fundamentals than this, like Dave, Powell Industries, CPRX, GSL. Look at the revenue here. This company did $3 million of revenue this quarter, and on the $3 million of revenue, they lost $140 million in net income, lost $160 million in net income. So it's just the fundamentals don't align with the stock price. And there's just been, the reason the stock is doing so good, there's just a lot of hype around quantum right now. And it does kind of look like it is in a nice uptrend and like a perfect little imaginary uptrend. Like it does look good from a technical point of view, but the fundamentals is the only thing that scares me. And this is huge. Actually, I didn't even know this. This is a great move for them. These are the same thing like IONQ did. They just diluted the life out of you, but they completed a $550 million acquisition of Quantum Circuits. So they're actually finally going to have some real revenue. Like the revenue was $3 million this quarter. Like they're finally going to have some like real revenue, but I still cannot, there's no world. Sorry, I just disconnected for a second. I'm back. Sadly, there's just no world where I can justify a $9.5 billion market cap on D-Wave Quantum on this quantum name. But that doesn't mean they won't do bad, because there's that swing trade momentum and stuff around it, but I just couldn't trust anything meaningful in that stock. Hey, thanks again, Rand, for all the gifts there. He says, Netflix, do you think it'll reach $100 again? Honestly, I think so. A lot of people say don't catch a falling knife, and I agree with that. But this one is a quality one that you should buy the dip on, in my opinion. Not financial advice. Is a super small position. If we just kind of think about Netflix, like they're just a easy company to understand. It's just a subscription model company. You pay them. A lot of people in here probably have a Netflix subscription. A lot of people would like cancel their Netflix subscription last out of a lot of subscriptions. But they have over 300 million premium subscribers, and here's the bottom line: they make 2 to 3 billion of real net income a quarter, and not just net income, but free cash flow. That's what FCF stands for, free cash flow as well. Make it 2 bill plus a free cash flow, 2 bill of net income. Like, it's a good business. And that's why I like Netflix. They're an advertising play now. I'm a big fan of ads. The Super Bowl's coming up. I think last year's Super Bowl was on Netflix. I do wonder if this year's is also on Netflix. But Netflix has basically broken up the business where they have like a normal tier subscription that's cost, I don't know the exact numbers, but call it $15 a month. But they also have like an ad tier subscription where you can pay them only $5 a month, but you see ads. And they actually, on the ad tier subscription that only costs $5 a month, they actually make more from that user than the premium subscriber. But look at his forward PE. It's a 27. That's why I like Netflix. A 27 forward PE. I like them as an advertising play. I think advertising is like for example, OpenAI, which is ChatGPT. They're actually doing Facebook ads now for the first time ever. They used to just have that organic growth. Now OpenAI does Facebook ads, and they're doing a Super Bowl ad they already announced. So there's going to be a Super Bowl ad. Like they. In a lot of situations, like Meta as well, Meta's a steal of a deal too. Like, you basically get a guaranteed return on your ad spend if you do these ads right. So why wouldn't you? All right. Yeah, Netflix. Anyway, only good thoughts. If I wanted them as 5% of my portfolio, I wouldn't make it 5% today, but I'd make it 1% because they are quality. I'm staying away from hype stocks like QBTSA. Same with like RGTI. This one's one of the worst stocks I've ever seen. Dang, this one's worth 7.8 billion. So look at this. This company's worth 7.8 billion. Here's the revenue. Do you think this company should be worth 7.8 billion? The revenue's 1 million or 1.9 million, and it's down 18% after it fell 23. And they lost 200 million. Like, who buys this? Like, I really don't know, but it's just the hype around quantum. Like, that's why I focus so much on financials, because that's what moves the stock in the long run, and that's the main thing you want to focus on. Like, if out of all the stocks that have a chart looking like RGTI, if I was going to buy a stock that had this exact same chart or something, I would want to buy one that actually has real good fundamentals and real like numbers to justify if the stock goes up. Because a lot of stocks have that like initial momentum, then they go up on no reason, just momentum. But to sustain that momentum, they need to have good fundamentals. And that's what I focus specifically in all my portfolios. Like, all these stocks right here, Comfort Systems, like, they gap up on great numbers, and they just continue to gap up. They just continue to go higher because the numbers are so good. All right, Constellation Energy, my bad. Hey, we did a lot of Constellation Energy analysis. CEG's a steal of a deal at this price. Another one is kind of like Netflix. I'd buy it now, but I wouldn't go crazy into Constellation Energy. I do own them here. I'll show you my position right here. This is my favorite utility stock of all time. It's like basically the only one I own besides Southern Company. Out of every utility stock, basically electrical stock to buy, I would buy CEG. It's my favorite one, and they're finally at an attractive price. They're down 22% year to date, but we're still up 40%. We bought them a long time ago. Like, we've done nothing with our position, and like for the past 4 quarters, like we haven't done anything in over a year with this stock. We've just received dividends. And kind of show you my my buy orders and stuff down here. But anyway, CEG, number one purest play for nuclear energy, no close second. They own 30% plus of all the U.S.'s nuclear reactors. They own over 30 reactors. The second place competitor has like 5 reactors. That would be Vistra Energy, VST. But why the stock has fallen so much is basically they huge PJM auction participant, and basically which is basically the PJM auction is just basically a collection of like 8 states for all the electricity prices for all the 8 states. And CEG is huge in there, and the administration wants to cap prices, make these companies give like 15-year contracts with CEG. Basically not great for the outlook, but that creates a buying by the dip opportunity. I don't know if that's actually going to go through. Normally we knew this news before, but we didn't know if the government was going to actually give corporations that big break. It's a dilemma. So actually I like CEG. Did you cover now? Hey, yeah, actually, we have not looked at ServiceNow. We'll check them out right after this real quick. I saw someone say QQQ. This is the NASDAQ 100. A little life hack is there's QQQ and there's also QQQM. QQQM has a 0.05% lower expense ratio, and it's the exact same ETF, moves the exact same way, run by the exact same people with the exact same holdings to the T, same NASDAQ 100 strategy. So it is the same ETF, just with the 0.05% lower expense ratio. A little life hack if you want to save a little bit. One cool thing about the QQQ, the main QQQ, and they recently did this. It used to be a lot worse. It used to be like a 20 basis point spread in expense ratio fee difference. But QQQ actually in December, like literally December 25th, lowered their expense ratio. I didn't believe it. I didn't think they'd do that, but they did. Anyway, a great fund, basically a great ETF to buy and hold forever. It historically does outperform the S&P because it is a little more tech heavy, and tech normally always does better. But yeah, look at here's what the ETF is. It basically is breaks your money up for you in a bunch of different stocks. Its largest holding is Nvidia, then Apple, Microsoft, Amazon, Google, Tesla, Meta, Walmart. So all the top NASDAQ 100 names. One company just got added. CEG, Constellation Energy, is in the QQQ. It's in the NASDAQ 100. Walmart's in there. Yeah, that you just got added. Let me do Rolls-Royce real quick, and then we'll get to ServiceNow for sure. Oh, Rolls-Royce. What's the ticker symbol? That's R. I think it's RYCEY. Yeah, I'm a legend. Look at that. I remember the ticker symbol. Okay. Rolls-Royce, a lot of people know Rolls-Royce as that car company that sells these luxury cars, but that's not what this company is. This is mainly an aerospace and defense stock. That's actually why it's been doing great these past couple weeks. You're on the Venezuela oil stuff. Like whenever these war fears escalate, owning these aerospace and defense stocks is a nice hedge. Think of like a Raytheon, a Lockheed Martin. So look at this. They're not expensive either. They had a one-time adjustment to their PE this half, so the forward PE is really what you want to look at. And even on a forward PE, it's a 28. I mean, that's not nuts. That's actually pretty cheap for the industry. And look at this. Yeah, 50% of the revenue is a civil aerospace business. They make these jet engines, and they're also in defense systems. That's 24% of the entire business is defense. And then power systems is another 22%. They're very diversified, geographically. Like US is 30%, then UK. I think that's where they're headquartered. I think they're headquartered in the UK. Let me double check you on that. Yeah, or Greater London. Yeah. That's where they're headquartered, in London. So since they are a European company, we have converted the currency from British pounds to US dollars. So whenever we look at their earnings reports down here, it says H1. They don't report in quarters. They report in halves and then full years. So it kind of looks a little different. But anywho, the forward P is at 28. Pretty good. I wouldn't sell it. If I own Rolls-Royce, I would not sell them. It's really an aerospace and defense play. So let me do ServiceNow real quickly. Yeah, this is one of the software names that have been getting crushed. Hey, look at that. Great recovery today. 3% recovery. They got like one of their contracts got removed, like the Treasury Department reducing their contract by like 15 million. It was some small deal. So ServiceNow growth strategy questioned after 13 billion in acquisitions. Well, I like acquisitions. So this is a cybersecurity stock. It's a subscription model cybersecurity stock. ServiceNow and OpenAI partner to integrate advanced AI models into business. That's pretty cool. ServiceNow enhances partner program with new building program. Well, anyway, let's go look at their actual numbers. And I like that $13 billion acquisition. It says bearish, but I wonder anything. But anyway, you look at that, 96% of this company's total revenue is subscription model revenue, and the expectations are up and to the right. Revenue is supposed to hit 2.67 billion in 2 quarters. EPS is supposed to hit 51. It's never been higher than 51 before. Like every metric's supposed to just go higher and higher for the rest of the time. And like this is already a really profitable company. They're right now making 400 to 500 million of real after-tax net income a quarter as we speak. So, but they are a little expensive. But software always trades expensive. But the risk to reward's actually pretty fair, I think, on ServiceNow. Come on, PE ratio. Can we load here? Well, sorry if my Wi-Fi is a little slow here. Well, there we go. The forward PE is a 62. The current PE is an 80. They're still experiencing their 30% growth, which is great. So as long as they keep up this trend of continuing this 30%, annual EPS CAGR, this is totally justified. So I like the acquisitions they're doing. US is 60% of the revenue. So this is a software name. And it's not just, ServiceNow that's really struggling right now. Like, it's not like the stock is doing terrible because they're missing on expectations. Like, no, every quarter, they beat on revenue, beat on EPS, and beat on EBIT every quarter for the past 3 quarters on every metric in a row. But it's the whole sentiment around the whole software name that makes this an attractive buy. So check this out. I actually just made a video called 10 software stocks to buy now. And these are the ones we looked at. Everyone on the screen here, we looked at, ServiceNow, ServiceNow, GoDaddy, Adobe. Like, look at Adobe, another software name, just done terrible. Here's CRM, which is Salesforce, also been struggling. Duolingo is another one. So it's really the whole industry that's kind of experiencing this downturn. And I was going over, hey, if you want to see my favorite software stock to buy on the dip, I guess I kind of give you a hint. Dang, Microsoft's up 4%. That's the one we were talking about. So Microsoft was my favorite buy. I kind of went in order. So Microsoft was my number one favorite software buy. And then my second favorite one was actually Fortinet. And that's the crazy part. I made that like a couple of days ago, and now Fortinet's up 5. Microsoft's up crazy. I guess I didn't really. Oh, hey, what's up, Logan? Can you do Zeta stock? Heck yeah. Oh, hey, Pedro, thanks for the review. They're working on GCAP as well. So, for the Rolls Royce. Hey, pretty cool. I've got RR.L in my ISA. What is RR.L? I don't know if I can find the .L, but if you give me the name of that company, I can probably find it for you. So let me do Zeta real quick. I think this is like, it's like a software name. They're like an AI software name. I know they had recently like an integration with OpenAI. That was like a couple weeks ago. They partnered with OpenAI, which is pretty cool, to like integrate OpenAI into their Athena or Zeta Athena platform, whatever it's called. But they've had great growth, and they're just now getting profitable. If we look at the revenue's up 25. Okay, Rolls Royce. Yeah, hey, I was thinking Rolls Royce is RYCEY. Okay, makes sense. That's probably the actual ticker for it, the non-ADR. But yeah, look at Zeta. The revenue's up 25, after grew 42, after grew 25. So the top line is just great. And if you go to the bottom line, it's even better. Look at the year-over-year growth rates and how they're narrowing their losses. They narrowed the losses by 80%, 55, 45, and then they made net income. So at this, probably the same time next year, they're actually going to be making net income every quarter. Pretty cool there. So yeah, they're basically losing no money anymore. I wonder if they're doing any acquisitions. Not really doing any acquisitions, but they don't need to. So this is all organic growth they're experiencing. The revenue is going to go from 260 to 360 just a year. So there's still a lot of top line and bottom line growth expected here. And that's why this one's really interesting. It's hard to assign. Yeah, so it says the forward PE is a 400. Again, that's because they are just getting EPS positive. So I really want to do like a multiple year out kind of forward growth metric there. So yeah. All right, we can do one PRGS. All right, let's do this one, UZG. Thanks for being here. He says Progress Software. Guessing this is another software name. Sadly, they've not done too well. They're the same price as they were back in 2017. So the same price as they were in 2017. They're worth $1.8 billion. A forward PE of 22. So that's a low forward PE. So let's see why they're at a low multiple. Is it because the growth is gone? No, like the growth is there. Revenue's up 17 after 21, after 12. So the revenue's growing and the profits are. That's actually super incredible. They really are. Like that's after they paid a bunch of taxes. They made 25 mil of real net income this quarter. So when they are at a 22 forward PE, they really mean that. They're really at a 24 forward PE. Revenue still, so kind of single digit growth, I guess, is expected, but they're beating on every metric every quarter. This one's really interesting. I wouldn't just completely dismiss this one. I actually do really like this one. They had good earnings last week. Yeah, they really did. They beat on profits was the main beat there. Yeah, let me check the gross margin. Well, the net margin, the net margin basically went from 0.5 to 10%. So that's good. What do you see happening with BSX? Earnings looks good, but their growth has been stunted. Let's check out this one, Boston Scientific. They're on my watch list. So yeah, the stock has been flat for exactly a year. So yeah, literally on January 20th last year, it's kind of where it is today. Let's see their earnings though. So they do, this is a healthcare company. So check this out, some cardiovascular service or healthcare service. So that's up 22% after 26, after 15, after 14. So they're on a nice streak of growth. Like there is no red in the middle. Like it just continues to climb higher. So that's great news. What about their other business? They also have their Med Surge. And it's also nice double-digit growth. It's up 15 after 11, after 10, after 11. So both businesses are growing double digits. So that's why I do like this one. And beating on every expectation. They beat on revenue, beat on net income, and EBIT. So actually, I don't know why this stock is struggling. Maybe just valuation's high? Is it though? Oh, so it's a 38 forward PE. So it's just, I like this one still. I really do. 38 forward PE is still a little expensive, but the current PE is at 49. It's way cheaper than its actual PE. So they're having their this year's 30% growth. Whoa. The margin expansion here is crazy. The revenue's up 20 and the net income is up by 61. So yeah, that means margin expansion. Net margin went from 11% to a 15. That's pretty crazy. Free cash flow is, whoa. These year-over-year growth is on the free cash flow. They did $1 billion of free cash flow for the past 2 quarters in a row. That's really impressive. So it's like a non-oxygen business, or what was that? Or cardiovascular. We can check out their website. Reject cookies. Yeah, no. Yeah, it looks like some healthcare name here. Pretty cool. Okay. And they have real profits. They really are printing money. Just a little, even after the dip, they are a little expensive, but yeah, I do like them, Shark. PSFI, what was that one here? Yeah, I looked up PSFI. I can't find that one, unfortunately, Craig. If you maybe give me the super quick, give me just the full name of that company, I can maybe find her. BAE Systems. Is that it? Oh, we found that one. This is another, it's probably, if you said PSFI, it might be some ADR company with a slightly different ticker symbol that I just can't view on this brokerage, but maybe under a different ticker I can. So here's BAE Systems. I believe this is a European aerospace and defense name. Okay, so we'll convert the currency to US dollars. They're headquartered in UK, British. But here's what they do. Electronic systems, air, maritime, platform and services, cyber and intelligence. How's that growing? And yeah, the US is most of the revenue, or 47% of the revenue does come from the US, and the UK is 26% right there. And here's so they're a UK company, so they report in halves. So for the first half of this year, they've done 1.4 billion net income. So what's the forward PE? Whoa, so this is why this company, even though they're at an all-time high today, they look expensive in like a technical analysis. They're not too expensive on an actual fundamental analysis. Like this forward PE is a 26. That's not nuts. I mean, 26 forward PE. So, maybe just the growth is slowed, or what's the half growth, or 18%, 12. So double-digit growth. Honestly, I can see why that one has done so good. BAE is another great British defense name. Yeah, it is, Brian. MSTR. Okay, we'll do this one as kind of the last one here. MicroStrategy. This is basically a higher proxy Bitcoin. As you can see, they don't move exactly together, but they always like rhyme together. Usually whenever Bitcoin goes up, MicroStrategy goes up more, but whenever Bitcoin goes down, like it happened recently, they go down more. So it's kind of like a higher beta Bitcoin, in my opinion. I don't know if I trust, I'm still questioning this, if I trust MicroStrategy more than just actual Bitcoin in the long run. Just right now, I'm just going to take the safe stance and say I trusted Bitcoin more than actual MicroStrategy for the long run. Well, let's see. MicroStrategy acquires 2.13 billion in Bitcoin. Interesting there. Strategy reduces credit risk. Okay. Well, here's what this company does. They don't do anything. I'd love to be the CEO there. Seems like a pretty easy thing. Here's what they do. They just issue shares. So we're on their cash and financing activities. If this is positive, that means they're either issuing shares or issuing debt. They're not issuing debt, so all this is stock issuance. Like look at Q4 of 2024. They diluted you by 18 billion this quarter, and that's the quarter where they bought 18 billion of Bitcoin with all that money. And then since then, that Bitcoin's up like 20-30%. So on top of the Bitcoin's assets appreciating, they're continuing to dilute you every quarter. 8 billion, 7 billion, 5 billion. They just buy more Bitcoin. So this company basically just owns a bunch of Bitcoin. That's how in 1 year their assets are from 8 billion to 73 billion. It's all taking advantage of this stock. Whenever it's kind of like a self-fulfilling prophecy. They issue shares to buy Bitcoin. Bitcoin goes up because of Michael Saylor's buying, and then the stock goes up because Bitcoin's going up. So interesting there. So PennyMac, that's the name of the company. All right, we'll see if we can find it as the last one here. PennyMac. Oh, I must have just typed it in wrong. Oh, you said PSFI. It's PFSI. Okay, we found it. Haha. Sorry. So PennyMac Financial, a $7.8 billion company. Yeah, this must be a bank, I'm guessing, or no, I'm stupid. But I only thought that because the PE ratio, because they trade cheap. Literally a 10 forward PE. So they traded 10 times next year's net income. Production, well, that's great growth. It's up 22% after 69% growth. So yeah, these year-over-year growth is in the middle look good. And their servicing revenue, that just hit a record. It's never been over 200, even 200 million before. Yeah, it was 259 million this quarter. So that was a surprising beat. Yeah, beat on expectations. Analysts expected 570. They did 630. So yeah, beat on revenue. That's a crazy margin. Their net margin is a 30%. So the revenue is 630 million, up 53. And on that, they netted 181 mil. And that's after they paid 70 million of taxes. Like they really did net this. So they pay a dividend, 0.8% dividend, low payout ratio. Let's see what they do exactly. Holding company, production and servicing of mortgage loans. Okay, so it's an interest rate sensitive mortgage loan play. And, you know, if you look at like a Rocket Mortgage, all these are doing pretty good right now as all the interest rate sensitive stocks have kind of been going up, like the REITs, the real estate companies as well. So anyway, I hope you guys have a great rest of your Friday. If you want to support me, there's only one way to, that's hit the follow button and subscribe to my YouTube channel. I'm trying to build up my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube, Nathan Robert, you'll find it. I'm also streaming on there. So if I talk too fast and you want to like rewind it, or I'd really appreciate if you to watch the stream from the beginning or something if you missed something you want to see. So yeah, you can watch it on YouTube. But yeah, I don't sell anything. I have no course, book, WhatsApp, I don't coach. I'll never follow you or DM you. So please watch out for people impersonating me. We did have to, like, there was people in here watching the stream with the exact same username and profile pictures me with all my videos. Like they were trying to, like, there's so many people impersonating me. Please watch out for those people. Just know I'll never ever follow you, DM you, and I sell nothing, never will. So anyway, see ya. Thanks so much to all the members: Brian, Paul, Clem, Sharkwater, Pedro, Craig, everyone. See you later. UZG. See you all soon. Happy Friday. See you tomorrow. Thank you to everyone on the YouTube stream the most. Hey, if you still have